That's what I said. Why don't you do it?
Okay, sorry, yes. That's good.
You don't have volume.
We have all?
No.
I'm with you now.
Well, is she on the line but just can't hear?
No.
All right, well, we're going to go ahead and start.
Somebody could text her, tell her we started.
I can do that, I'll do it.
Good morning. Welcome to the July 30th, 2020 budget meeting of the Manatee County Board of County Commissioners. We're going to start this morning with a prayer by our great Reggie Bellamy, Commissioner Reggie Bellamy, and then followed by the Pledge of Allegiance. Please stand if you're able.
Let us stand and pray. Dear Heavenly Father, we thank you for waking us up this morning. Thank you for giving us life, health, and strength. We ask you to come with us today and just watch over us and the decision-making, the leaders. We ask you to keep our community safe and guide us in the direction that you would have for us to go. In Jesus' name we pray. Amen.
Amen.
I
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Thank you. I know we have Steve Johnson on the line. Has Vanessa been able to join us yet?
Not yet, Commissioner. We're working on
Okay. All righty. Well, we're going to go right and jump into today's topic, which is budget reconciliation and approval of the tentative millage rate.
Thank you,
Sherry?
Madam. Thank you, Madam Chairman, members of the board. We do have an update to today's agenda. Let me just read it for you. This is an update for the July 30th meeting. We have an addition to your agenda, a 1 p.m. time certain. It is item number 5, and this will be an update on the status of Tropical Cyclone 9, now known as Tropical Storm. I cannot say the name. ECIS, so Tropical Storm ECIS, and Public Safety and Emergency Management will provide an update to you at 1 o'clock, which would be right probably before you leave for the day. Thank you. Also, of course, we're here. This is our budget reconciliation meeting. The last time we met to talk about the budget was on June 26th when the county administrator's budget was presented. Today, Financial Management Department Director Jan Brewer and her staff are here to go back through the budget. First, I want to just talk about logistics here. You have all of your many budget books. Some of you have those here. We do have them all here in case there is something we do need to look up. We want to take as much time as you need on any topic, so it's not a rush to the finish today. There's a lot, going on and a lot of things to look through. But Jan's going to walk you through the current status, a follow-up of the questions that you had on June 26th, and then some additional time that we're taking to get some more answers. Today, though, we want to start off with a project that we felt fit right in to what we're doing. As you know, we have a very exciting internship program this summer. We have 20 interns. We've seen now, the administration and the department directors have seen all 20 presentations yesterday, and you're going to be wowed by these folks. They did a fantastic job. One of them, though, is particularly important to today, and that's under financial management. And so I'd like to introduce Haley Harrison of Jan's staff, who is the mentor for this year's financial management intern, and then our intern will go through their project, which is pertinent to what you're about to be talking about. Haley?
Good morning, Commissioners, County Administrator, Deputy County Administrators, and Director of Financial Management. My name is Haley Harrison, and I am a CIP Budget Analyst with the Financial Management Department. In financial management, we love to look at numbers, don't we all? Or we wish everybody loved numbers. So we wanted to create a project for our intern that could marry the budget book and the CIP projects with the numbers. That way it's more digestible for the public and it's more, let's be clear, entertaining for everyone. So that's what we did. And we went through all the CIP volumes. There was 3 last year. We have 1 this year. But we went through all the projects that we felt would reach out to the public the most. And with that, our intern is Miss Brittany Hassick. She is our CIP budget analyst intern. So I will have her come up and present to you just a little bit more about her project, and then she'll also give you a little teaser clip of what she's been working on as well. So with that, Brittany.
Good morning. As Haley said, my name is Brittany Hassick. I'm a rising junior at the University of Florida, and I'm studying accounting. This summer, I got the pleasure to work with financial management as the CIP budget analyst video content intern. And so, as Haley was saying, the idea was to make the information more digestible about the CIP, as well as the monetary values and the specific projects that are encompassed within the plan. And that idea transformed into me creating a very informational video that walks through some of the projects that are involved in each of the subcategories of the governmental section of the CIP. And in the video, we talk about starting and end dates, as well as the monetary values and when those funds will be put into these projects. So by doing that, I got to look through the CIP books, which I had never done before, so that was a really new experience for me. And I got to digest all of this new material, which is going to be really helpful for my career in the future. And after doing that, I started working on my actual project, which took about 7 weeks for me to get all of the footage collected, talk to the different departments about where these projects are in progress, and then actually edit and create the video itself. The total video ended up being around 9 minutes long, but today I have a short teaser that focuses on public safety.
Righty.
The Capital Improvement Plan, also referred to as the CIP of Manatee County, aims to serve as a blueprint for the future of the community's growth and development. The CIP is divided into 2 sections, governmental and enterprise, each of which are divided into multiple subcategories. Governmental is divided into general government, libraries, parks and natural resources, public safety, technology, and transportation. The subcategory of public safety currently accounts for 12.1% of the total funding within the governmental section of the Capital Improvement Plan budget. The Public Safety Department of Manatee County doesn't just protect the community's human population and visitors, but also our animal friends. A CIP project to construct a new animal shelter in Manatee County is expected to begin in October of 2020 and will be completed in August of 2023. The total project cost is funded to be $10 million with an initial investment in FY21 of $100,000. A new CIP project that began in April of 2020 at the Manatee County Jail is the construction of a new medical wing. This new facility will allow for an increased capacity for medical treatment of inmates, as well as construction for a needed mental health ward. This new medical facility is expected to be completed in July of 2023. The total project cost is approximately $16.1 million, with an investment of roughly $1.8 million in FY21 for design. Manatee County ambulances play an important role in the safety of the Manatee County community. However, there is currently a need to add more ambulances to the current fleet. 2 new CIP projects are for 2 new ambulances, one to be located on University Parkway and one in Myakka. These projects are expected to begin in October of 2020 and be completed by September of 2021. These projects will be funded entirely in FY21. The new ambulance to be located on University Parkway has a planned cost of $517,000, while the ambulance to be located in Myakka has a planned cost of $415,430. Technological advances in our public safety department include our next generation 911 project that began in October of 2019. The Next Generation 911 project will provide an emergency services IP network for the 911 call routing, an upgrade of existing telecommunicator furniture to larger stations, and an upgrade to existing 911 capable call handling equipment known as VESTA for technology advances to occur for I3 National Emergency Number Association, otherwise known as NENA, standards. The total project cost is $3.3 million with an investment in FY21 of $1.5 million. The Capital Improvement Plan of Manatee County is a comprehensive blueprint created to use the county's resources most efficiently and effectively while planning for the future growth and development of the community. The governmental section of the CIP accounts for 47.1% of the overall CIP budget. The funding for these projects come from a variety of sources. The largest of these sources is the Infrastructure Sales Tax, or IST, which provides 57.1% of the total funding required for governmental projects. The next largest source is impact fees, which provide 19.1% of the total funding required for governmental projects. Other sources of funding include beach erosion, general revenues, federal and state revenues and grants, gas taxes, debt proceeds, contributions, and SWTIF. These sources each account for smaller percentages of CIP governmental funding. So just as a quick side note, this video is going to be set, the full 9 minutes is set to go onto the CIP website so that the public can access it whenever they want to take a look at the projects and figure out what's happening. And also there is a short video that will be posted about how to use the CIP dashboard and how to access it. Also, I've created these shorter clips for each of the subcategories so that they can be used in the future for posts on social media, just to reinforce with the public the types of projects that are going on and the things that they can expect to see within the coming months or the coming years.
Okay. All right, comments? Yes, Carol.
Is there any way that, is there any way that, you can, I know you can hear me, is it okay? Okay. Is there, whoa. Any way that we could put this on the county's Facebook page? I mean, this is so, it really educates the public on what is going on. I don't know, is
Yeah.
it too long?
We can work on that. As Ms. Hasek said, there's various sizes of the videos that she worked on. There's all different types of materials, so it's definitely something that we can work on how we would roll that out and the right timing for that. But it's very helpful for people to be able to see the project and hear a little bit more about it in that format.
And it's comprehensive. It kind of covers everything in a very short time. Very good.
Thank you.
Good job.
Thank you. And did you learn a lot doing this?
Yeah.
I did. I learned so much that I didn't realize I would learn. I came into it knowing that I would have a new experience because I've never been in a budget office before, and the practice questions we get during class are not always as realistic as what you'll see in the real world. But I really learned a lot about just the inner workings of how to work in a budget office, which I never thought that I would get that much experience, and it was really very eye-opening for me as I look to see what my future career will be.
Great, and you
Good
probably
girl.
got a really good experience in governmental accounting, which is not exactly the same always as
No.
other accounting, right? Our budget process is a little bit different. I
It is
imagine.
for sure, especially because we learn more of things that happen within private companies or small businesses. That's the focus of how our college classes are tailored. So this was definitely just a whole new route to go on with accounting and budgeting.
All right, well, great. Well, maybe you have a future in public service. Never rule it out. We need
right.
people that understand how governments work in public service. So, thank you.
Thank you.
Good job.
Anything else?
Yeah, thank you very much. I think you're going to be seeing additional interns over the next 2 weeks. We have some scheduled for the next work session on Tuesday, I believe it is, and then we have the remainder scheduled for your board meeting on the 11th. And a key thing for people watching, and of course for Brittany and what her project was, is she used start and finish with a project and a result. And her result is achieved by making sure that it is more understandable for the public and that it is visual and people can see where their funds are going to. So we want to thank her for selecting us and for the financial management team overseeing her project. Thank you very much.
Thank you.
Thank you.
Okay. All right. Next up is Jan Brewer, your Financial Management Director, and Jan's going to guide you through this morning's discussion on the budget reconciliation. Please feel free to reach out to the chairman if you have questions and want to be recognized. We're here for you this morning as long as it needs.
And if you're in the book, will you let us know where? Because I like to highlight and take notes. Thank you.
Good morning, Commissioners, Madam Administrator, Deputy County Administrator. We are excited to give this opportunity to bring you up to speed on what we know. Currently, this world is so fast changing. I've never in my whole career seen anything that every day changes, and that estimates are changing constantly. I know that the virus was supposed to go dormant during hot seasons, and yet now we're at the epicenter. So very interesting times, and we're going to bring you up to speed on what we know and remind you of where we're at. So Sheila, if we could start. We have a couple of goals for this meeting, and I wanted to go through. We're going to have the administrator bring you up to speed on some comments of where she's at. We want to talk about the impact of the July 1st certification. We haven't seen you since then. We provided you a memo, but we'd like to bring you up to speed on that. We also has, as of last night, the latest estimates from the state of Florida. We want to bring you up to speed on how Florida is estimating versus what we estimated, because if you remember, there was no information out at that time. Next, we would like to review what impact it's had on your stabilization funds. That way you know what your stabilization funds are at that time. And then finally, we'll talk about the budget schedule for FY21. And with that, I'm going to turn it over to our administrator.
Thank you. My comments are going to be brief this morning, but I think they're important because want the board to know that, again, throughout the last several months, as we've been working on the budget, and since we presented the budget to you on June 26th, there's been more twists and turns. Ms. Brewer's going to go through those details with you, and a lot of you are wondering, well, where are we going to land? Well, we're not landed. Just want to make that clear. We're somewhere in flight right now. We're kind of midway through this, and our recommendation is going to continue to be to allow us to come back frequently to give you updates on the status of these various funds and on the updates of the different changes that Jan will be receiving both from the state and from our locals. And so we're concerned, that people will think that we need to make certain types of decisions, different decisions. We're very keyed in on the current information, and it's ever changing with each month. We're looking at statistics. Tuesday, when we were here, we had the dashboard report, and it's an important group of reports, and I want to preface that by saying that the dashboard report is really the first place that I look for changing trends. When I look at each one of those, it may not be that common to the individual to understand what's there, or we may want to change those over time, which we certainly can. We have a lot of new tools. We're using Power BI now, which is something we've been using for about the last 8 to 12 months to be able to bring forward some information. But two things just as an example. In the building department, building and development services, you have commercial permits, residential permits, also the developmental plans that come through. And there are 3 different things that were happening there, and you can see these on the dashboard report. Residential permits are high. They're there because a lot of those permits were going to be moving forward, and then when the shutdown took place, they had to hold a little bit. Supply chain, work, being able to get their workers there, and then again, when everything opened back up in early June, things really picked up, late May, early June. So you can see on that dashboard report probably the highest residential building permit applications that we've had ever. And that's one factor. But when you look at the commercial permits, those were down 41% over last year's number. So you look at those two items. Then when you look at the applications that are coming in for development review, that's flat. You can go back and take a look at that. And so when we look at all those things, then we match up with the budget, what's going on, it's pretty clear to us where we think we have data that's solid or where we need to keep analyzing it and say to you, we'll be bringing these back every 2 to 3 months. We'll be bringing this back up and taking a look at it. In another area, and I'm just going to pick public safety because we always try to look at the response times. 11 minutes. Right now, in the most recent DASH report, it says 11.4 minutes, 11 minutes, 4 seconds to respond to people. That's actually a slight improvement over previous months, but just intense. And so that's continued to stay firm. And even with the population growth and with COVID calls, which we have been tracking, averaging anywhere from about 15 to 20 a day, those COVID calls. There's a special screening process for those that Stacy Needham and her group put together. And so when a 911 call comes in, people are screened because you have to send out a special group of people, special unit, special PPE has to be used. And so even with all of that going on, public safety under Director Sauer still remain at about the 11-minute mark. And so those are just some things to look at in there. And so as we turn that into budgetary impacts, Jan's going to then start speaking about how we're projecting forward. So I'm going to turn it over to Jan and just let you know that it's an ever-changing, about every week, new statistics. She's just received some state statistics just this week, and so she's going to be talking about that. So I'm going to turn that over to Jan.
Thank you.
Thank you.
So the first thing we're going to talk about are the property values at the July 1st certification, because we haven't seen you since then. To fresh everybody's memory, truth and millage, trim, is by state statute, and we as a taxing organization have to follow that statute. So there's a couple of really extreme points that we have to fall for, and there's 4. So the first one is the July 1st certification. That's when the property appraiser has given us this, they certify that these are the values that you will be used for the next year. We received a preliminary estimate on June 1st, and that's what we used in your budget. So the July 1st brought us up to date. So we've hit that point. The next date in the timeline that we have to hit is the August 4th date. 35 days after they provide you the certification, we have to turn it back into the Department of Revenue with a set millage. The millage cannot go up from that point. Once you vote today, it can go down, but it cannot go up. What happens is that the property appraiser then sends it out in the trim notice. That's why it's called the trim notice. In the state of Florida, they wanted to make sure every taxpayer understood what they were being taxed for. So the first notification that you're going to have a public hearing, you have to have 2, will be in that trim notice. Once you have that public hearing, we advertise for the second one, and we have a second public hearing, which in this case will be on September 21st, and then you have completed all the requirements by statute to tax the taxpayers. So with that, what happened on July 1st? So in the slide in front of you, you can see the recommended budget is the middle number. Those were based upon the property appraiser's preliminary estimates that we were given June 1st. In prior years, we estimated because we always presented the budget before those estimates came out. So this time's a little different. So at June 1st, they estimated 7.1 for countywide. I'm reading the first line. You can see the certification went to 7.3. So it increased by 0.2%. Unincorporated increased by 0.2%. It went to 7.8. And Palm Air increased by 0.1%. So how does that translate? Those are very healthy growth numbers for property values. We seem in sync with the surrounding West Coast as to what's going on. So what exactly do those translate into? So the next slide shows you how this impacted each of the funds. Now remember, you're collecting millage and allocating it into specific designated funds. You can see by far the largest goes into the general fund, and these are netted at the 95%. That the 5% less 5% we always hear about. By statute, you have to take 5% out. So at this point, there's $533,218 that increased in your overall budget, and this is the breakdown of the funds. Again, by far, the general fund is the largest. Now, moving to the next slide, this is the one where I am going to try very hard because we use a net budget. So I'm going to walk you through what changed in the net budget. In the first column, the total budget, I wanted you to understand what changed. Your property taxes increased it by $533,218. The TIF, the Southwest TIF, increased by $319,472, and the Port TIF by $44,758. Now, remember, this is that when you have the total budget, you got the transfers going from different funds and the doublespeak. But please let me keep going because I think I've got it where you can see it. The uses, as your property taxes increase, so do your tax collector fees by statute increase. They increase by $21,893. Your CRAs, that would be the Downtown Bradenton CRA, Palmetto CRA, all those little CRAs increased collectively of $616,414. Again, see there's the double Southwest TIF. You have to pay the TIF. The item above is where we brought it in. You've got the transfers, and how did we make it balance? $424,561 had to come out of reserves to make it balance. Okay, now hang with me. Let's go to the next column. I'm taking out all the transfers in the next column. Okay, you can see the sources at the top, the uses at the bottom. Go to the last column, which is the net budget. What changed in your net budget is that your tax collector fees went up, your CRAs went up, and your Southwest TIF went up. Because we put the Port TIF, remember, if you take out transfers, cash balance, and internal service funds, that is only what will be left is the change in the budget. So how did the $957,779 affect you? It came from property taxes, and it also came out of reserves. It's the two numbers netted together. Property taxes less what we took out of reserves makes up that difference. Now, if we move to the next slide.
Before you leave that one, Madam Chair, can I ask you, the 616,000 CRAs, isn't like almost 500,000 of that the Bridge Street? and Brighton Beach? Or is that not included in this?
No, if I can provide them for you. Thank you.
Because that seemed awful high. Then I remembered that we paid them almost 500,
Can you show this?
but maybe it's separate.
Okay, so for the CRAs, okay. This is in the memo that we sent to you, but I wanted to make sure you could see it. You're good. That's okay. Okay. He's going to pull it up for you because I do think it is important. And the memo is given to you. Okay, so if you can zoom in on this area, the top area. Really, if you can go even closer, even closer, even closer. There we go. Will that two? All right, how about I read them?
There you go.
Okay.
This was in the
It shows it.
memo
Yep.
that was
Okay.
dated
July 9th.
July 9th.
July 9th. Oh, no, it's,
July.
we got to look for it in our emails,
Yes.
right?
It's in your email.
It is?
Yes.
Okay, sorry.
Yes, it would
So
be for me.
14th Street increased by $52,943. Bradenton Beach increased by $38,890. Bradenton Downtown Authority increased by $358,000, I believe it's $642. Central CRA increased by $40,033, and Palmetto increased by $125,706. Remember, the CRAs, when they're established, you set the beginning year, and anytime the values rise above that, that's the amount that you're paying back to them. So the values increased in those areas, so the incremental tax that's gone up that you're giving back is the $616,414.
So in Bradenton, if I can, I think I see it as 1.4, and Palmetto, I just got lost, was 2 million? 2.1?
Okay, let me explain what you're looking at, and that would help you, because I shortcutted. The first column is the July 1st certification, and that's the calculation we used. So all of those entities that I just named were $5.7 million collectively.
Right.
When we provided the recommended budget, we had those values that you would be paying beyond their base year at 5.1. So you have to pay the difference based upon the property appraiser's certification. So since he increased the values and it's definitely 5.7, the additional amount you're going to have to pay that we had not anticipated is the $616,414.
Thank you.
Yeah, it was actually July 10th was the email,
Okay.
so I did
Okay.
find it.
Okay.
You did.
July 10th. Has the memorandum attached to it.
And I do have a hard copy with me. If we need to make any more, we can.
Okay, if we can flip back to the PowerPoint. Sheila, if you can, okay, right there. So your recommended budget, when we saw you last at June 26, is $710,731,508. There is the change to the net budget, and at the bottom line is the proposed net budget that we turned into the clerk of $711 million, roughly $0.7 million. Now, one of the biggest questions since the general fund, if we move on to the next one, what happened in the general fund? Because that's one of your biggest questions. That is usually where, as I previously showed you, the largest amount of your tax goes. So the general fund increased by $413,591, which we showed you earlier. Taking out the expenses that are isolated to the general fund, there was $957,077 taken out in expenses. So the change to stabilization went down by $543,486. But I have good news, so if you'll hold that thought, I can show you the new estimates because you're going back the other direction. Okay, so one of the things we wanted to do was bring you up to date on every piece of information we know about state revenue estimates. How it works in the state of Florida is that DOR estimates and provides to all the counties and cities the estimates of their best guess of what revenue you're going to receive in the next budget year, and that's how you budget. You base your budget based upon their estimates. So going through, Sheila, if you'll forward one more, I want to show you what we estimated versus what they've estimated. So the very first column is the new estimates. That's the state of Florida. We're going to start at the top with the gas taxes, and if you don't mind, I won't go through each one, but if you look at that $23.2 million total for your gas taxes, that is what the state of Florida is saying you're going to come in. We had proposed $20.9 million. There is an increase of $2.3 million in gas taxes. Now, let me back up and talk about each one. The first one, the constitutional fuel tax, we estimated at 20% going down. The state has estimated 14.3% going down. So we're not that far off. The county fuel tax, the same. We estimated a 20% drop. They went down 14.3. The local option fuel taxes, which are the ones that we've had placed in place locally only. We went down again 20%, state went down 10.6%, and the 9th cent fuel tax, Manatee went down 20%, state went down 9.8%. Each of these gas taxes support transportation. The majority of them move forward into gas tax funds, which are used specifically for CIP. So with that in mind, I'm going to go on down to state revenue, and then we'll give our recommendation overall what we think we should do. So overall, the gas taxes have an increase of $2.3 million that we can bring into the budget to use mostly the majority of it for CIP projects. In the state revenues, these were very interesting to me. Up until basically, I think it was yesterday, we only had the first one, the county revenue sharing program. Manatee County went down 20%, and the state went down 10.9%. So we had estimated 9.1 million. The proposed budget's 8.5, and so there's an increase of 650,000. So where you went down on the July 1st, now you're going back the other direction. The one that's very interesting to me is the next one. The local government half-cent sales tax. We had estimated we went down 20%, the state went down 16.6%. That one, the new estimate is 22.9, and our proposed budget has 22.3, an increase of 565,103. The communication services tax, we went down 20%. The state went down 9.3, and that resulted, as you can see in the third column, of an increase of 67,958. So for the general fund, the three I just talked about with the state revenues, that's a $1.2 million increase to the general fund by itself. Now, the last one, which is the local discretionary sales tax, that one's not in. They stalled again, so that one should be in, I'm hoping, by tomorrow. That's the one that we're most interested in because that supports a lot of our CIP projects. Mm-hmm. Now, having said this, and I want you to remember this statement I'm going to make, I would like you to look at what's occurred to us this year as we go forward, because my recommendation to the administrator is that I believe we need to bring these in the budget. These are the state estimates. I believe that we need to bring them in, but my professional recommendation is that we put them in reserves in the respective areas where they're supposed to be and review it on a quarterly basis. As soon as we see those monies are coming in appropriately, we will come back, ask you for a budget amendment to move it out of reserves and put it into the CIP projects. With the gas taxes especially, all of our CIP projects have to have the funding up front. So if we brought in $2.3 million, used it for a CIP project, we appropriated and signed a contract for that CIP project, and then that money did not come in, we still have to pay that money. So I think professionally, I would suggest we take the conservative approach and do it on a quarterly basis and bringing them in. Now hold that thought and let me, if you don't mind, let me keep going for just a second and let me show you what's happening to your major revenues. So you understand where you're at right now, because a large part of your budget is that we estimate where we're going to end on 9/30, and that's our beginning number for the budget. We have to bring all of our money in for the new year. So how are your revenues tracking right now? Your ad valorem is 96.7% collected right now. Now, please remember, and this is one of the things I wanted to make sure I say, you've collected all your revenue right now, but you have 3 more months of expenses that are associated with that revenue to go. So if you look like you have a large balance right now, remember, you got 3 more months to get through that you'll have no money coming in for those taxes, and you have expenses already appropriated to be spent. So the good news is ad valorem is coming in strong. For Manatee County, we rely heavily, as we've told you in the past, more on property taxes than we've been diversified in our expenses. In this scenario, it's played out well because your ad valorem is strong. So that's a good thing. Where other counties are getting hit because their revenues are weakening, one of your strongest revenues is still strong. Moving on, this one is very interesting to me. Communication services tax is a tax that they have on communications, whether it's voice over IP, whether it is cell phones, whether it is internet streaming videos. And I did a comparison from 19 to 20 because that's how you can kind of tell where you're going. What's interesting is the first 4 months of the year, see how it was going negative. It has been in that trend for the last 4 years. But look what happened in June. Now all of a sudden it's going up. It's because the world shifted. And I believe that will continue to happen. It's only a $50,000 shift, but it's an interesting shift. It's gone up. So I do expect that one to continue out. Moving on to the next one. This is the one where I said, hold that thought about what we had. State revenue sharing, the state of Florida with this tax, they are sharing part of their revenues. And a large part of their revenues come from the half-cent sales tax. So with this revenue specifically, you can see in 19, it was the same amount until you got to July. That's because they have a new fiscal year and they change it and they give you the same amount. August has 2 payments in it, and then you can see September was the same, and that same amount continued into 20. Same amount. But look what happened in May and June. This is the tax that if we shut down or we have problems in the state of Florida,
Goodness.
they gave you 50% less. They called us up, actually, they sent us a note and said, on these 2 months, you will receive almost 50% less than you've received any other time. Good luck with that, is basically how it works. So I just wanted, for the one where we got a $600,000 increase in the estimate, just know that $600,000 can go away just as quickly.
What happens in August?
In August, that is a reconciliation month, where it may happen in September, it may happen in August, but that's accounting reconciliation, that you make the adjustments for everything that happened in the previous year. All the accounting books are closed, and if you get any more, that's where it comes in at. And that pattern will happen this year too, and we've anticipated that.
Madam Chair? So I know we're having really hard times now, so the state can do this. They can just say, we're going to give you a decrease it by 48%.
Yes. Yes.
Because we need it for everything
Yes.
else that's going on.
Well, because they haven't received it. And so they're letting you know, we haven't received it, therefore you're not going to receive it.
And they get theirs from sales tax.
Yes.
Okay, so right there it shows economically what's going on.
A large percentage, and I don't know the exact percentage, but the majority of the state budget is coming from sales tax. That's a
Right,
huge
it
part of
is.
their budget. So when they don't receive it, it's the trickle-down effect.
Now, the Amazons and the online shopping now is charging tax now, I noticed, state tax, and they never did before. I think last year they started.
I am doing my best to support Amazon.
Me too.
So
Everything.
I can tell you that the taxes are being collected in every area. Everything is shifting, but the main point with this, I think, is because of everything that's happening, the pandemic, it's trickling down.
Mm-hmm.
That's what's causing things to shift. So right now, we're just now seeing evidence of what's going on in our economy.
Right, thank you.
Now, the next one is interesting to me, too. Now, we get 2 half-cent sales tax, and I don't want anybody to get confused. There is a half-cent sales tax that we receive directly from the state of Florida, whether we do anything or not. And then there is a half-cent sales tax that is voted by the voters, which that is a local tax. So I'm talking about in this slide, the ones that are coming from the state of Florida. So October, you're going to see negatives. Those are accounting entries, so I just kind of disregarded that. But you can see we were very strong and healthy between the 2 years until May and June. May and June are actually March and April. Those are received 2 months behind. So if it makes sense to you, that May number of an 18% drop is actually the result of actions that happened in March. The June drop of 27.7% is actually the drop that happened in April when the state shut down. So, what do I know what's going to happen during the months of May and June? I don't. Again, the state has done their best estimate. Their estimate is based upon their intel, and we're doing ours just based upon what we know. So right now, again, I think the wait and see of how you play out this year is how to go. Now, with the half-cent sales tax, we've taken into account a 20% drop for the rest of this year. So are we in line with where we think we're going to end on September 30th? Yes, ma'am, and yes, sir. We are right in line with where I think it's going to be. If it falls out of line, I come back to Sherry and I say, look, this is the new data, but right now we're tracking exactly where I think we should be. Moving on, gas taxes. This is a summary of all of the gas taxes you collect collectively. Remember, the largest percentage of this gas tax goes to your CIP projects. We anticipated a 20% drop for the remainder of this year, and then in next year, again, we did a 20% drop. May and June reflect an 11.3% drop and a 33.4% drop. Those drops are March and April. This tax runs 2 months behind, so I do not know what will be there for June and July. But again, time will tell as we go through. Do I think we've adequately planned? I do. One of the things for the audience at home, if you look at January and February, you see a drastic decrease in January and a substantial increase in February. That's the date we received the check. We just received the check in the different month. This is based upon your general ledger system. So this is when the cash hits the bank. Moving forward, tourist development tax. This is probably the one that's very unsettling. So we compared 19 to 20. In May and June, and these, again, are tracking behind a little bit, you see a 46% drop and a 73% drop in revenue. I do believe for June and July, and I had spoken with Elliot, I don't see him in the room, Elliot believes that June and July are much stronger. We're getting back on path. I believe that because what I see in our community. But we planned for a 30% drop in this tax by the end of the year and a 30% drop next year. This tax specifically, I really believe you're going to have to do on a maybe even a monthly basis to see and bring funds in if we're doing better or take corrective action if we feel we have to.
Okay, I guess Steve had a question. I don't know if it was on this or the
previous. Jan, going to those last three slides, the one of them that you're telling us, is a 60-day delay from the numbers, and then the last two, including the tourist tax, are those also a 60-day delay in reporting those numbers? Because my concern obviously is, I think, the last 60 days have been a lot worse than the prior 60 days, if you will. And so you've kind of seen those numbers go down, and I'm a little concerned that they're going to become even more downward trending because, we haven't really seen the true, May and June numbers yet that have been posted. And so are all those numbers typically running 60 days behind reporting from your scheduling, or are some of them more current than others?
No, sir. And I only heard part of the question, but I'm going to repeat it back to you to make sure I heard it correctly. So the last several slides, I indicated that they run 2 months behind, which is true. On the tourist development tax, they run 2 months behind too. I'm 99.9% positive of that, but I will verify and email all of you, but I believe I am dead on. Sherry?
Yes, I did ask that question yesterday, late Jan, with Elliot, and I think what he had mentioned, close to 2 months behind, about 45 to 55 days behind, but right in the 2 month range.
So, yes, sir, this tourist development tax, the two decreases that I've highlighted in the yellow book, that will be March and April. We have not seen May and June yet.
Okay, Carol, you had a question?
But what about like the IST? That number is 60 days behind. I'm just concerned those numbers are going to be a lot worse than what we're seeing there right now.
Yes, sir, there is the potential for that. There is. Currently, based upon our best estimates, the shortfalls that we've anticipated going through September 30th, we think we're okay at this time. If we're not, then how we make up the difference is with its stabilization. And then we'll take more corrective action in the budget for next year. We'll come back to you and say, we lowered it by 20, we think we need to lower it by 30, this is our options, and this is what you can do. But you are correct. I cannot sit here and tell you that the estimates that I've given are close. I can tell you that the estimates that we're using, when we were on a call with Hillsborough, Sarasota, Pasco, Pinellas, when we were on a call with all of them, our numbers are within the range. We might have been a tad bit more conservative, but they're all within the 15 to 20% range.
Thank you. What I'm trying to do
Okay.
is to...
I was just curious. I mean, that's such a moving target right now.
Yeah.
As to, because getting numbers 60 days behind, and I understand, it's just a budget, so it's not set in stone type of thing. But, we could have some really traumatic effects if those numbers from 60 days ago are a lot worse than what we had, the 20% that you had budgeted. So I'm just, trying to factor that into, whether that stabilization fund will end up being adequate enough, or are we going to have to do other things? But,
Yeah.
please continue on, and I'll continue to have questions as the morning continues. So, but thank you, Jan.
Yeah, what I was hoping we could do, board members, is get through all the slides, ask questions about the slides, and then we will have a discussion. Because I think a lot of us have different points. I've been writing them down, concerns about what we're hearing and reading and what we know. So if we could just focus on the slides, the information that's being presented to us, and then if we want to get into a discussion after that, that's what I would like. Carol, do you have a question?
Yeah, I know you'd like it, but I learn as I go. And when there's a slide like Steve just asked, I have a question, so I can write it down in my notes on my slide.
No problem with questions. I'm just trying not to keep from debating.
We have all day, so, but here's my question. Steve, and I don't know about the rest of the county, and Sherry, you've talked to Elliot, with the tourist tax. Since May, Steve says it's gone down. Where I live, the hotspot of tourism, it hasn't since Memorial Day. It's packed. So, but I know we have the entire county, and what I heard, and I've told people on the islands that complain about this, that it's gone down in Manatee County because we're not doing the sports and stuff like that. Yes. So if somebody can let us know if that's what Elliot's saying, because...
Yes, I can let you know that.
Okay.
That is part, and again, we conferred at detail yesterday about is it the right message to say that these are the correct, this is the trend, or this is something to watch? And so, as we've mentioned before, sort of taking a pause from moving any projects forward, there is an impact on the inland that's a lot more drastic than there is on the islands. And of course, islands have been up. And so you're certainly going to see a different number, but it's just too soon to tell whether that negative number is more akin to the March number, more akin to the April number, or going to be a new number. And so that's why we're saying, let's keep this moving, let's keep each month reviewing what the percentage is, because it does impact inland with the shutting down of large sporting events and large gatherings.
And you say drastic. We don't say that word very often, so if somebody could just keep us updated on the overall, because, again, I'm not seeing it, but I'd heard it, and now you're saying that. I'd like to have, be able to communicate better.
I think a negative 73.2% is drastic, and that was June's number, but remember what Ms. Brewer said, that's really April's number.
Right.
So, it could balance out. The trend will start to change, and we think it will. We just don't know the level by which it'll change until we put each month in.
Okay.
Crystal had a question?
Janet would be very helpful. You got me, guys? Okay, there you go. Very helpful to me when you email us a new one, if you actually, the slide that you just showed us,
Yeah.
if you then just gave the next month and
Yes,
then the
ma'am.
percentage.
Sure.
Instead of just saying, hey, it was 37% down or
Sure.
whatever.
I haven't had a chance to ask the administrator if it'd be okay, but that's what I was thinking. It probably would be good to track
Sure.
each month so you can see how we're progressing through this. It
would
gives you
help-
a better
it would help
comfort.
me.
Yeah.
Just, that slide's perfect, you understand it, and we all now know it's 60 days behind, so we know that even though it's, gonna be September, it's technically June or whatever.
And 2 holidays occurred
Yes.
that are not reported yet.
yeah.
So just be remembering that. And then there's a third one coming, and those are, tend to obviously fuel the level of change, so.
Thank you, Jan.
No problem. And one thing I wanted to mention, especially Commissioner Johnson, I think it'll give you a little more comfort. When we estimated where we're going to end this year, when I say we went down by 30%, we took the month of April down to 0. We took the month of May down to maybe 75%. So we graduated the economy opening back up. When I say we did a 20% reduction, that's netting the whole year together and seeing how it comes out. But again, it is a truly month-by-month test.
Got it.
Okay.
Okay, moving on to the infrastructure sales tax local. Now, this is local. Again, this is the one the state's giving you, the half-cent, not the infrastructure sales tax. But this is the infrastructure sales tax, the infrastructure sales tax local. This is your IST.
Oh.
So your IST, again, in October, you can see those are accounting entries, and those are just reversals. From there on out, this is how the cash is flowing into the fund. You can see May and June, a 9% reduction and a 28% reduction. Again, those are March and April numbers. It's 2 months behind. But for me, this is very promising because the local sales tax was harder for me to estimate. And in our CIP, we actually estimated it would go down 60% next year. So I have a feeling even by September, when I come in, I'll be coming back saying, we can do more projects, we can move it forward, we've got more money. So this one especially, we really want to watch and keep our eye on, and as Brittany's video highlighted, a large portion of that CIP is based upon these numbers. So this one is the optimistic one for me. I think we're going to be in much better shape than I thought. Now, this one's interesting. These next two are very interesting to me. This is the building permits. These are coming straight off the dashboards, the progress reports that are listed on the website. I thought it was interesting. I was curious how the permits were cycling. So the commercial side of the house, you can see started going down even way back in December and January, but it had a good positive in March. But then the last 3 months, and these are real time, these are not lagging, 40%, 50%, 41.2% reductions. Here's what's interesting. Now, keeping that in mind, look at the residential side, which is the next one. The last 3 months for residential, you see April, where we closed down, May down 5, June is up 49.4% in permits.
And Jan, if I could just interrupt too, July is up in at least equal or exceeding June right now as we're working through July.
And you had indicated that because there'd been a shutdown, you'd think a lot of those permits might have been held for a while, and that might be one of the reasons for the
Well, it
increase?
doesn't
Is
look
that-
like, it may not be that now that you start to see July and August
Okay,
pick back up.
okay.
Yeah, that was
Betsy, I'd like
initially.
to, I'm sorry, I'd like to make a statement when free.
Yeah, Vanessa, you're up next. Go ahead.
Well, I'm finding these numbers really, Jan, I would agree with you. I think they're amazing. Owning a small business, a retail business, I can tell you that April, of course, was very slow for us. May, we finally opened back up. May the 3rd, I think it was. April was 0. But interestingly enough, in looking at Jan at what you might see happening, is that our June was the largest June that we had ever had in the 21 years of being in business. I can't explain that. July has already doubled from July a year ago. So I think from what I'm hearing and from real estate people that I know and talk to, that we were fortunate in some ways that, we had so many businesses that were called essential. And I think that's what we're seeing in the building permits on the residential side. A lot of industries didn't stop. They kept going and going. And they were selling homes, interestingly enough, as well. I'm hearing the real estate market was pretty active. They had to sell homes differently than what they've done before. But that being said, I mean, the market's hot right now. And it's hot not just here in Florida, but I'm hearing in other areas of the country. So I think it is going to be very interesting to see where we are when we really get figures in, particularly on sales tax, because I can tell you my sales tax in my business that I just been in, way up for June. So hopefully, I know tourism is down, and I think you're right on target. I think Elliot was right on target. Out east with sports, of course, we haven't had much of that going on. So I think that's where you're going to see the figures in tourism hurt because I know that I heard Carol say that the islands are busy. I'm telling you, I was hearing from some business owners on the islands that own bed and breakfast and hotels both, and they were doing business. So hopefully we will see a positive, not maybe as bad as what we thought, because from what I'm hearing from a lot of people, figures are up. Even some of the restaurants out this way, I can only talk about the ones out where I live, but a lot of the restaurants are actually getting back to some sort of normalcy. When I say normalcy, I'm talking about monies that they're making, at least I know here in Lakewood Ranch. So thank you. Good information so far.
Madam Chair?
Misty had something she wanted to say.
Yes, Jan, thank you. I have a question, just so I understand the commercial permits and the residential permits. Does that mean any commercial permit, or that's not like a residential start, a building start? If somebody replaces their air conditioning, if somebody replaces the roof, are those all considered under the permit numbers?
I need to pull, it's actually on the dashboard and on the website, I can pull and verify that number. I just pulled the permits as a whole, but I understand you're asking, I clearly see what you're asking to see. We'll get you that answer in just a minute.
Okay, all right, thanks.
Yeah, it's dashboard information, so if you could go to the dashboard and look and see
My computer's not working.
how those permits are reported. I don't know the answer to that, but I know it's on the dashboard specifically.
They're new home permits.
They
They
are.
are, oh, wow.
New home.
The commercial.
And just to clarify, no, we didn't hold permits. That's not what I was trying to say. Just saying that there weren't as many applied for for new permits in those earlier months because work wasn't going on and they were then bringing those in. But those are new home permits.
Wow, that's fantastic.
Okay.
Okay.
Carol?
these are the building, the commercial. How come they're real time and the others are 2 months behind? I'm just curious. I wrote real time so I would know because I'm making notes.
Right, because the others are behind because they're coming from the state.
Got it.
We
Okay.
own this one.
Got it.
So this
Anything
is
that
our
we own-
internal in-house.
Anything we own is real time.
Yes.
Got it. Thank you.
Yeah, in the dashboard report, when you look at the dashboard, it'll tell you that too. You'll notice some are, some information, what's in that dashboard will show the month we just ended, and some will show a different month of ended, and that, it's still in real time, if that makes any
Yeah.
sense.
And one thing I wanted to point out, when you look at the tourist tax online, that's coming from a gross sales number. What I'm showing you in tourist tax is the money we're getting.
Yeah.
So I'm trying to keep the comparison for us on the cash flow. Now, one question I had, the reason I even looked at these, or that I constantly look at these, is because it tells how your economy is being stimulated, right? And the construction is very strong right now. But then I asked the question, well, how does that affect the building fees? You know, what does that look like for us? So the next slide takes all fees coming in for the swimming pools, for the fences, whatever. This is commercial, this is everything. So in comparing year to year, you can see that the fees we're bringing in April, May, and June, and this is real time. This is no lag. This is real time. They went down 16% in April, May went down 9.7, and June is up 25.4. Now, remember, you have a 30% reduction on top of an already 20% reduction, I believe, in your revenues for your building fees to give a break to the builders in the community because our fund was rather large and we're trying to eat it down. So that includes that reduction that's in place and it's staying in place. And all of our projections that we're showing you show that. But this was an interesting side to me. Okay, if nobody has any other
No,
questions, yes, ma'am.
I just, a couple things, and I kind of wanted to wait till you got through everything. So way back when we were talking about taxable values and the increase, and it was 7.1, then it went to 7.3, that's information provided to
Yes,
us
correct.
by the property appraiser, is that correct?
Yes.
Correct. In the state of Florida, the way the function works, that is the property appraiser's job. He goes out and appraises from January to March. And then by July 1st, he has to certify what those values are so that you can do your budget process. So both of those estimates that we use, the 7.1 as you said, and now the new percentage, both of those directly came from the property appraiser.
Okay, so we don't set that. That comes from the property appraiser.
ma'am.
They determine what the values are.
Correct.
And that has a huge effect on our budget. That's what we use primarily for our biggest revenue source. But we also know that we have Save Our Homes, which
Yes.
has a limit on
Yes.
that, which is 3 something, or the CPI, whichever is less, correct?
Correct. And the CPI, I'm looking to see because I wrote it down. So the Save Our Homes enacted years ago says that your values can only go up the lesser of either a 3% increase or CPI. The CPI for this taxable year will be 2.3%.
Okay.
Where in prior years it has been a little bit lower,
Okay.
it is a little bit higher now. A large part of the increases we've seen over the last few years in our values is based on growth, on new
Right.
construction.
New construction.
And this one is a little bit more of a mix.
So the dollar amount takes into account that limit. Is that true, or is it a gross number?
No, it takes it into account. When we receive it from the property appraiser, he is calculating,
Okay.
is it the lower of the CPI or
Okay.
3%? He calculates that,
Okay.
so the number we received, we're basically just multiplying it by the millage.
Okay,
And that's
so
where we're
So
at.
he does that, we know that it isn't, okay.
Yes.
So it's something to think about. So our property values are continuing to go up, which is a good thing, right? But we are in a very different time when we think about our small businesses. Normally, we're all excited, yes, things are wonderful, things are growing, our community's growing.
It is.
But we know that our small businesses, our restaurants, much as I love hearing Vanessa say that they're up. I mean, when I go in, and I've only been into 2 restaurants since inside, I prefer to sit outside. I mean, they have to eliminate tables, they have to, people are very, very distant. I've been to the Anna Maria Oyster Bar because they won an award for how great they're doing. But I mean, they're losing revenue. They just have to be because of how few tables they can have. And I just heard another restaurant, the Blue Rooster in Sarasota.
Yeah.
I heard that on NPR this morning on my way in. They have to close.
They do?
I saw another one on 41 was closed, and it's an extremely tough time. So increase in property values, normally just a wonderful thing, but we gotta really think about how our small businesses are gonna be affected by this. So I hope you'll keep that in mind as we discuss this. It's something that I thought about. I also heard a statistic this morning, flashed, the GDP down by 32.9% in the last quarter. Biggest drop in GDP ever. Yeah, I mean, it's just a function of what everyone's going through, right? So we just need to keep that in mind as we talk about, our tax rate. Carol?
Good point. Very good point. What bothers me and I think probably Lakewood Ranch is getting up there with the islands. When I did the budgets, and even every year, the island property values are a little higher than the counties. They go up. Only because I still read about the budgets, what's going on there. And my city's actually raising the millage, which is like, I can't believe it. I'm going to write a letter to the editor about that. We all need to live within our means because their property values are up. There are some communities, some areas in the county where some cities, I guess, that the property values are going up higher than what our tax collector said, correct? Our property appraiser.
I'm sorry, I got lost for just a second.
Well, like I know we've had 7 or 8% property value increase in the county, and then in my city, it's gone to 8 something. And I know it's because on the island.
Right.
But when we're talking here, are you averaging the whole county or just what we're talking about, the unincorporated?
So when the property appraiser assesses, he divides it into the taxing districts. So if it's county-wide, you're pulling in all the area.
And that's the 7.3.
And then if you're doing just, say, Bradenton,
right,
he's isolating it to that area. Now, I can provide you, I have access to what changed in each of your cities, and I can provide that to you if that would be helpful so that you can see. Just as the unincorporated area, the MSTU you have, is a boundary just for that unincorporated area.
I would like that because we represent everybody across all jurisdictions, and I think that's good to know when somebody asks us that, if they're in a city.
That's on the property appraiser's website. I'll be happy to pull it and get it to you so you can see the comparison.
Okay.
And Jan, and I know you've said this before, but the reality is when we look at our fiscal year, since it ends in September and starts in October, I mean, we had a predominance of the fiscal year
Yes.
when things were very, very good.
Yes.
So our fiscal year, and the fact that it's 2 months behind, the downward trend is really a smaller part of this fiscal year.
Correct.
But it might be a bigger part of next fiscal year, so.
Correct. That is correct. And one of the things that really helped you out, and I guess that's a better way to put it, since a large portion of your revenues come from your ad valorem tax, that is whole and solid. So as we had a good year with all these other taxes I just went through, we had a very strong start to the year, and it's a small portion of the year that goes down. That's why we averaged it out. And then the next year, again, is just an estimate based upon what we think will happen.
Yeah, and I don't want to sound too negative, but again, listening to, I was listening to how many people are not paying their FP&L bill. That was also on NPR this morning. A huge number cannot pay their bills. It's just reality. You don't have a job, can't pay your bills, right? So we have extended out, which is great. we're not gonna foreclose on people, but the
Right.
reality is, you don't pay your mortgage, at some point, it's gonna catch up to you.
Yeah.
So what's gonna happen then? Do we get into foreclosures? I don't know, but it's just something to think about, because we are so heavily dependent on ad valorem tax dollars, and it's great that the values have gone up, but I've seen this, I've seen this play out before. We all saw it
2009,
play out in 2008, right?
Yeah, we sure did.
So it's just something to be aware of. So,
Correct.
all right, I'll go ahead and turn it back
Very-
over to you.
Okay.
Betsy?
Yes, I'm sorry, go ahead,
A quick
Priscilla.
question. Way back in the beginning, you said we're estimated at 413,000 more dollars this year, which is great. But how did we have to take money out of reserves to balance it? So how did making $413,000 cost us $568,000?
Okay.
I mean,
Sheila,
I
you
mean,
can
for
back
people,
up.
this is the kind of government finances that drive people crazy.
Okay, so I'm gonna let Sheila back up the slide for just a second. There it was, Sheila, one more. Go forward, there we go. I believe that's the one you're talking about.
Correct.
And we're talking about the general fund. So what I'm saying is that based upon the property appraiser, he's saying, okay, you're actually, based upon values are higher, you're gonna get the 413,591. At the same time, by statute, you've got to pay your tax collector's expense, so you take that out. And then he gave us the new valuations for all of those CRAs that we've committed to.
Right.
And in the
I
CRAs,
understood
again,
it, but I'm just saying it cost us
She's fine.
$543,000 because we made $413,000.
Right.
Let her, yeah.
it's because,
I mean, that makes no sense.
it's because the values came in. And the values came in, and that's the only thing that changed in the budget between when we saw you. So it was the CRAs and the TIF that pushed you over the edge of what it was.
I
It-
understood, but I'm just like, that's just crazy.
Well, and for the public, that's a good point, because
It doesn't
it's
make
not our
sense.
decision to make those changes. We're required.
I get that,
to
but basically,
place that.
430, we made money, cost
Yes.
us money because we made, I mean,
Because we have to pay those people.
Well,
it's just, and I want to.
It's just an accounting, it's
I get
really
it,
just
but-
an accounting thing. So, no, in the end, we're gonna be better off, but when you have the, I mean, we did
No, I
have an increase.
understand, I just,
so-
people look at that. and
Yes.
When I looked at it, I'm like, that's just the craziest thing I've ever seen. But I mean, I didn't say I didn't understand as much as I just wanted to make a point. And I also, to sum it up, want to say, thank goodness we have Jan and Sherry do such a good job that we do have a good stabilization budget. We do have good reserves.
Thank you.
Because even when you make money, it costs you money.
Well, and I think that what you're pointing out too is that when people talk about you have all this money, it's restricted. So some of those monies that have gone into those other accounts, yes, we're going to have a little bit more in the CRA. CRAs get a little bit more, but the money can only be spent
For
for
the CRA.
those. And so that's where people get confused. Why can't you take that money, put it in the general fund and there are restrictions to it. And so thanks for bringing that back up.
I just more, just say, when I saw it, I'm just thinking, only in government can you make $413,000
spend.
profit more, and it costs you $568,000 more.
But I don't think we
Just-
should badmouth government. I mean, this is every government in the United States. I mean, this
No,
is,
no, I
this
just
is
meant that's
government
the way they do
budgeting.
accounting. I
Right, this
get
is
it.
not how, and Steve will tell you,
It's not
you know,
like the
this
real
is not
world.
like
It is
the
not
private
like the real
sector.
world.
Well, and I did bring this up before we got into the stabilization, because that is a good point. We all
Yeah.
know that there are people, and one of them's here today, and he brings it up every single time, and it is a good question. How much money do we have in reserve stabilization? What can we spend it on? Should we have that much money going forward? And we all know it's a big political point being made by everyone and their brother. Some people that I don't think actually understand it, but because we have the situation that we do, where we have budget stabilization, what does it mean? How do we live on that? What does it mean going forward? And I think you're going to talk about that
Yes, ma'am.
coming up. I'm just kind of setting it up. What does it mean coming forward, and how is that going to be affected? Because we are coming forward into a time where we know that, I'd love to say everything's going to go away and we're going to return to the economy that we had back in February. I would love to say that.
I would too.
But I can't say that. Maybe if you guys could say it, let me know. But All right, Jan, we'll go ahead and turn it over to
Well,
you.
actually, Commissioner Trey segued into a good section, because we're going to talk about next is your reserves, because I feel like in your mind, the next question is, how much do I have left after all these changes happen? And so what we're going to do, we provided you 2 very long sheets of paper so we could blow it up and so that you can see it, and it should be right there before you. And in the bottom right-hand corner, it says the slide we're on. So Sheila, if you advance one more, this is slide 25. And so we blew this up into an 8.5 by 14 so that you could see it. And I just kind of wanted to run through a few things. So at the end of the year, with all these changes, what occurred? You know, one of the questions I'm always asked with the general fund is, well, how much did we go up in taxes? And then what happened when we went down? Well, whatever we went up in taxes, we've gone down 30 million in the overall estimates in a lot of our areas. But a lot of mitigating factors made it better. One of the ones that I really want to point out, you had some debt service that reduced by a couple of $1 million. You had it the year before and now coming up in FY21. That played into helping you offset your losses, so you're not as bad. That was planned. When you issue a bond, you do it in stair steps so that when you, over time, if you need to bond again, you can. This time, that reduction in debt service was used to make us function without having to cut services. So the chart you have before you, let me read through it real quick, and then I'll answer any questions. And I wanted to point out a few highlights. So this is your cash balance reserve. This is your cash balance reserve. Remember, you have 4 reserves. 1, you're setting aside stuff for specific things. You have a salary reserves and a capital reserves. This is the cash balance reserve. This is where we hold the 20%. That's in the first column. So I'm going to take the general fund at the very top line and just walk across. 20% reserves are based upon the total expenditures and the total transfers that go in that fund. That is by the resolution set by the board. The stabilization that's left is 19.8. The other, in this case, we did place, this is where your emergency reserve is for your disaster fund, 6.5. We replenished it back up to 6.5. So you have a total of 87.6. I thought you would like to see that the 20% reserves represent 73 days of operations. So if everything shut down, you have 73 days of operations that you can do.
As
And
currently budgeted?
yes,
Okay.
as currently budgeted. And the stabilization for days in this FY21 budget, that stabilization will hold you over for 24 days if all the revenues shut down. Remember, by the Governmental Finance Officers Association, the very best recommended practice is that you have at least 2 months. 2 months is 16%. Manatee County has always maintained 20, which is good. That I would recommend and never change that. So as you go down here, we tried to highlight in each of the major funds, and they're divided by transportation, impact fees, special revenues. It goes into highlighted areas all the way down. It shows you total stabilization of 86.1 at the bottom of the page. But remember, the stabilization that you can use in your toolbox to use for a special item, you're not going to be able to touch the tourist tax. You're not going to be able to touch the beach erosion tax and spend it for a program in the general fund. The general fund at the top of the list is the most unrestricted fund and availability you have. Transportation, you've collected taxes, and that has 2.5 of stabilization in there to go forward. That fund cannot support the general fund. It has to stay in transportation. But I just wanted you to go through and see all of these as you're going down. This gives you an idea of the number of days you have. And again, the stabilization number of days are on your far right. A couple I want to point out. Parks, if you look in the far right, let's just go down the page. General fund has 24 days of stabilization. Transportation has 18 days. But as you go down to parks, you see 166. I want to bring up parks, we have not fully adjusted. Remember, most of parks happen in the summer, and we did not know what was going to occur with them. So when we come back in September, we're going to bring you an updated amount on parks. I have a feeling it will be reduced drastically based upon the estimates that we have. Charlie Hunsaker and I had a conversation the other day when we were in here. Right now, he's looking at a $500,000 loss for this year, and that's his optimistic estimate. So we really need to go back and look at that one. I just wanted to highlight that.
Yes, and Jan, that'll come out for any of the, if you think about any of the departments that have had programs that have revenues or fees that would have been shut down or reduced, like parks, also here, Convention and Visitors
Yes.
Bureau, those are the ones we're worried about. We're going to have to come back and modify and help them out.
Okay. Priscilla, you had a question about what she was stating?
Yes, Jan, how much on this transportation stabilization do we have to use? Because by the time we bid it, and then by the time we actually get to doing it, that we have, because I just know how much increase we've had in cost.
Right.
So how much on our stabilization, by the time we actually, do we go through to actually get the project done?
Hopefully, they're providing, when we do this budget and we establish the CIP, they're giving their best estimate as to what they think that project will cost. And Commissioner Trace is exactly right. What we're finding is when it goes to bid, because of the construction boom and market, it's often coming in higher. And also now with materials, it's getting harder to get some materials, then that's also causing some issues. So when we go back and we come before you and we're taking money out of reserves, that is where it's coming from in there. Now, here's my recommendation. What we've been doing is that as these projects, we bid them out, we find out you need another $4 million. Then it's coming back to the administrator and it's saying, this is what we see. Is there a project that has to be pushed out because this is a priority, or are we reevaluating and we're going to have to bring it back to the board? So far, it's worked out well.
Yeah.
But I do believe that is going to become in the future a more commonplace thing. But again, we've done this CIP so conservatively that I believe a lot with your infrastructure sales tax is going to come in higher, that we're going to be in the position, we're just going to be bringing in more money, and that stabilization is going to go up in the CIP project.
Here's some differences, though, to be thinking about. The supply chain this pandemic issue is not the same as back in 2008. Even though we're seeing decreases and we're looking at it, we're comparing it to the recession, it's not the same thing from a standpoint of supply chain. Things aren't as available the way they used to be and in the timeframes they were. The quantities, certain types of products that might have been coming from a long way away aren't available to come at the same time. So what you're going to see is you're going to think projects in some cases are going to take longer. It's not necessarily because we're not through procurement and through our process, but several factors. Some companies aren't back to full strength, can't access the supplies like they needed to, and or the workers. So there's a lot of factors going on, and when Jan's mentioning we want to come back to you, we're going to do this quarterly. That's why we keep emphasizing, instead of saying, well, we're not going to adjust the CIP for 6 months or a year, we're going to come quarterly, because it's going to take that kind of a real effort to be able to stay on top of it. And John Osborne's working on the project for us right now with all the departments in our Power BI format to try to determine what the number of days in each step is, because this is definitely something that is, concerning to us. So as we bring a project into the CIP, how long does it take us to get it ready, the scope of service written up, any kind of studies that we need to get it into procurement? When it gets there, how long does it take to get out of there? How long does it take for a vendor to be identified and the contracts to come, and then for things to really get started? Because once something's in the CIP, people automatically go, that's in the CIP, why isn't it built?
Right.
So we are really, our departments are focused and have been even before the pandemic, but more so since then, on streamlining their processes within the guidelines to try to minimize those issues. But what we're finding is that we have these other factors involved out there that we never had before. Design teams are very busy, and they're not as staffed up, let's put it that way, or able to be, because their revenues might not be coming in as quickly. So there's a lot of different factors, and that's why we want to address it on a quarterly basis.
I'm happy to hear that, because that's what I'm seeing in the real world, that what you see, what happened yesterday, could be completely different today. I'm happy I think quarterly is a good idea. I was more just thinking if we had to increase kind of that stabilization fund, but I think if we're doing it quarterly, we can keep a good handle on it, because prices are all over the place if you can get stuff that you need.
Exactly.
And there's a lot of stuff you need to build stuff.
Exactly.
Yeah, and people are retiring, people are changing their plans
Right.
based on all of this. It is very different, I think, than 2008. I've had a request for a break. I'm going to just mention a couple things. Carol's got a question. I would like, when we get back from our break, if you could walk through what the stabilization for CIP is and what the other is, because I'm not
Yes, ma'am.
sure I understand both of those columns. Carol, did you have a question?
And Reggie's raising too. Yeah, just for an example, my house got hit by lightning last Thursday and blew out my internet. Spectrum came, and the guy, they don't have modems anymore. And he told me it's because they get them in China. So they're using the old ones, and I got this old beat-up thing with dents in it and stuff that they're rebuilding. So that's just a small example. And I remember Priscilla with this issue with China, and she had steel baskets to put trees in where they're growing them in big steel pots. And they were having troubles, the prices went skyrocketing. But right now, Spectrum can't get you a new modem.
Yeah.
And that's like hitting home to a lot of people in this county.
Yeah.
So,
Reggie?
Yeah, my question is more on the stabilization number of days. I see we have pretty much a quota as far as reserve days of 20%. Do we have that? Obviously, we don't have that same approach as far as stabilization days, number of days. I'm concerned about the dollar amount next to those. Will we be able to see the dollar amount? Because that seems like, within, we were saying stabilization days, if I'm interpreting this the correct way, for example, with the phosphate, up under where it says special revenue, that's 553.
I just hadn't gotten there yet. Yes,
We will wait afterwards.
yes.
Thank you.
Yes.
Okay. All right, well, good. You know where we're going to go when we come back, but we'll take, 10 minutes? Is 10 minutes fair?
Sure.
Yeah.
Good enough? 10-minute break here.
yeah, numbers, we need more breaks.
All right, we're going to reconvene our meeting. Jan, you were just about to get into some more questions on budget stabilization.
Right. I think maybe the easiest course that might answer a lot of questions, I thought we'd run through the stabilization for each of the funds, and then I'll circle back and explain the stabilization CIP and then what the others represent.
Do you want me to
Okay, so I'm
look for
kind of going through
Reggie?
each column.
You want me to look for Reggie? He's the one that had the questions.
She's just going to go through it. He's listening out in the hallway. I think he's on the
He is?
phone or
Okay.
something, so.
Okay, so starting at the top again, under the stabilization column, I'm actually in the third column. Starting with general fund, it's 19.8. Transportation, 2.5. We get down to parks, it's 6.1, which represents 166 days, which is the far right column. So what I'm saying on that one, we did not adjust parks as much as we should have because I didn't even know what to adjust it to. Most of their programs are summer programs. We did not know the impact or where it was going to be. So when we come back in September or August, whatever we choose, we'll bring you an update on that because we need to bring you up to speed on that one. All we did with their revenue, we did not increase any expenses, and we just took all the ad valorem and put it into reserves. That's why it's so high. The unincorporated is 6.6. That represents 99 days. The building fund has a 6.4 million stabilization reserve, which represents 202 days. Again, we lowered the fees by 30% 2 years ago, an additional 30%, to try to eat down that reserve so that we get it below then, and that is still the course of action right now. Tourist tax, currently, we reduced revenues by 30% for the rest of FY20, and Elliot has talked about how he's restricting his expenditures as well. So that's how we're able to come up with a stabilization of 2.9 for next year in case what we estimated does not come to fruition. That represents 125 days in the tourist tax fund. In the beach erosion, remember one of your pennies goes to beach erosion. It has a 0.9 stabilization, 900,000, and that's 212 days. That beach erosion fund is a CIP fund. It's not really meant to be a stabilization fund. So usually whenever money accumulates within this fund, it's placed into CIP projects. This currently is just what's beyond what's placed into the CIP, and these are just estimates for where they're at. Phosphate severance, that tax is collected, and Charlie has very minimal operating expenses coming out of there and a couple of salaries coming out of there. He has special plans in the future for where that will go. That's a tax collected specifically under a resolution, so that one is restricted. I know it says 553 days, but that's really, it's for projects that Charlie has in mitigation of it.
Very restricted by state
Yes.
statute. It's not just,
That resolution.
it's not our own restrictions, but it is the.
Thank you for adding that, yes.
It's collected based on the state, but we don't get to, it's not a good slush fund for us, that'd be nice, but it's something that, it's there in case there's a problem with one of those mine reclamations and one of those mines. So it's something that I'm not sure. We've tapped into it with a little bit of help. I think Charlie was here, he'd explain how we have asked, you guys remember
Salaries.
making some changes so that we could do some staffing and do some other things. But I think it's very, very
We had to go to
limited.
the state and get permission.
Yeah.
Thank you for bringing that up. The next line item, I was just trying to be succinct to get it all on one page. The other special revenues, that's the sum of all the itty-bitty little funds that you have. There's street lightings, there is the 911 assessments, 911 fee, there's some assessments. What's some other one, Sheila? I'm trying to think of all the little ones. What I'd like to do is I'll provide you that in detail so you can see when there's stabilization in there, there is only funding for whatever that fund is collected for. It's not something you can move around. So that's why I I lumped it into one. It's isolated. I put it as 101 days, but again, those are just collected for those specific things. 911 fund is the one that comes to mind the most. And again, that's completely restricted to what that fee is collected for. Moving on down, internal service. So inside your internal service fund, those are your computers, your radios, your fleet, your fuel, your health insurance, and your other reserves. That's the 7.3 is the reserves in there to maintain those internal service funds. Water and wastewater has 20.7. Now, I kind of want to vary for just a second and explain that, because that's a lot of money. That's 70 million in reserves just for water, wastewater. I'd really like to explain. 32.2 million is 73 days of reserves. For all utilities, they recommend 120 days. So Mike has done a good job of keeping the extra 20.7 million, and as you can see, 73 days and 47 days add up to 120. So that's, I don't know if you consider it really stabilization, but that's a solid reserve for him because of the utility system, and that's very much a norm in their industry. The rest of their 17.1 million that's in the CIP, those are funds that are there right now that I know are funding projects that are going to be started either next year or the following 2 years. So that's where that comes in. Moving on down, there is stabilization in solid waste of 3.7 million. That represents 24 days. You also see that there's a 36.3 million in the other column, and that is your landfill closure reserve. So when the landfill closes, and if you remember, it is our responsibility not only to close it, but then maintain the closure over, I believe it's 30 years, I think.
30 years.
The last one is the Civic Center. Again, with the Civic Center, we did our best to mitigate damages in FY20. So we reduced, while we knew our revenues were going down, Elliot did a good job trying to reduce any expenditures he could, and that is what we plan to have left for next year as a safety net.
Can I?
Okay, now going back to the top, the next column is your stabilization, CIP. And what that is we've kept it in there because I'm calling it stabilization because if you decide not to do the projects, we can move it around. Because it's not next year, but it will be FY22 and 3 and 4. But these things are all planned, and this is the funding we have for it. We just have not established the project yet. It's been brought before you, but we have not established the project, so we're just holding the money in reserves.
When you say we haven't established the project yet,
I probably, in my accounting world, establishing the project means that we have a number, that we put it in the accounting system, and we've asked you to appropriate the money to go into it. So for example, let's say in utility system, they have a project that they know has to be done in 23. There is no sense establishing a project right now for a project that you're not going to touch for 2 years. We hold it in reserves in case something else pops up and we've got to ask you to switch it, and you appropriate only 1 year at a time into the accounting system. The CIP, you're planning for 5 years. And so for the 5 years, you've got designated numbers on them, but they don't correlate from 22 to 25 into the accounting system.
well, I guess I think like a planner, obviously. And I know when you do a capital plan, you have to have the project funded over a 5-year window because it's a 5-year CIP. So is this money, the, library, for example, I'll use that 5.6. We know it's going to cost that much over a 5-year window. Is that the money that's allocated for the capital project over a 5-year because you have to fund it, right, John? I mean,
Correct.
21 through, you're the expert now, not me, 21 through 25, it has to be funded.
All the money there.
all the money has to be there. So-
And this is where we're holding pieces of that money.
Okay.
It just has not been placed into the general ledger yet.
Right.
So I actually don't see that as budget stabilization. I appreciate it. I'd never seen that called. I understand from an accounting perspective why you see it that way, but I see it as funding for the project.
And
the
you know,
CIP.
actually, if you'd like, when we come back in September, I can move that out of there and move it into reserves for capital projects where it clearly isn't considered that anymore. It's just a norm of what's always been done, but I'm happy to do that.
Madam Chair.
Misty?
Yeah, and Betsy's point is, it makes a lot of sense to me too. So I guess the words that I don't like to see associated with that column are stabilization and reserves. Maybe it should say CIP funding for out years or
Perfect.
for.
That's a good idea.
Future project.
And
Out year.
why don't I do that, and I'll send it back out to you so you have it as a document?
That's a good
So I'll change that. So it will say CIP funding
Okay.
FY '21 through '25.
Yeah, that's what it is.
That
But
works?
it's allocated. It isn't something that we can
Yes.
move. If the project stays, yeah, sure, the project could go away,
It says
right?
for
But then we do a new CIP,
Yeah.
right? Then we
Correct, every
add a
year.
CIP, okay. Carol and then Reggie.
Can somebody explain to me what FBIP boating is? I've never heard of it, and I can't believe, if it's been in our budget forever, I have no clue what it is.
It's a Florida Voter Improvement
Brett,
Fund.
Program.
Program.
It's actually funding that we receive through the state of Florida for people that are the boaters through the registration of the boat,
The
I
oh, for
believe.
WCIND?
Yeah.
It coordinates with WCIND,
Yeah.
what?
Because that's where we get our registrations, that's what we use for dredging and stuff from the boating registry. Well, and the county does too, though.
Right, Sheila's telling me it is, just as I said, this is what is a collection of the portion of the voter registration fees that comes to us. We marry that with WCIND funds for a lot of our CIP projects.
Right.
It's not used for operational at all.
And it's separate and you can't touch it because it's
Correct.
just for that.
Correct, you
Got-
cannot reallocate it to the general fund.
Thank you.
Yeah,
And
so-
that is allocated through WCIND, so
Yeah,
that's what you
I'm
do
on
when you sit
board.
on that board. And those are capital projects, again, that are being funded over
And we
a
match
5-year period, right? Yeah. Okay.
Reggie?
All right, I just want to get, for my clarification, the way I initially understood stabilization is there is a deficit, we can go to it and then stabilize it. All right, so when we're talking about that terminology as far as the future, I just want to make sure that I understand in the current columns where it says CIP projects, in reality, that money is already allocated for something down the line. So it's not a stabilization.
True.
It's actually a bank in preparation for
It's a reserve.
for the projects, am I correct?
Yes, sir, and it's my error just putting that up there like that. It should say CIP '21 through '25.
Well, I'm not necessarily sure it's an error as much as it is an industry jargon, and where we may not necessarily
Correct.
be as familiar with the terminology as you are. But what I would always like to do is be a little bit more comfortable in my understanding as far as how I connect, because me, obviously, from my district, I'm always looking. Is there something that I can look at and look from a different focus lens so we can utilize differently? But there are a lot of restrictions here, and I respect that. But when I see something where it says stabilization, I'm like, okay, well,
I can touch that.
maybe, maybe not. But
Right.
I think for my better understanding, we may need to reword it, as well as always take in consideration the community reviews this. And
Yes.
they may have the general mindset as some of us do, as far as the terminology. So we want to make sure we're a little bit more user-friendly. That's all I say.
And I appreciate that. Sometimes I get caught in the accounting jargon so deep that I forget. And I really appreciate that, because that's one of the things, like with the video we showed you at the beginning, we're trying to bridge that gap so we get out of the accounting geek world and kind of get it into the normal world. I realize sometimes we live in a geek bubble, but we're trying very hard, and I clearly see that now. And maybe if I make this statement again, if I could, so the 20% reserves are the 20% that's been allocated by resolution. That's to keep that. The stabilization is any funding that's above and beyond that has not been allocated for a specific thing. And usually it is used to catch up for shortfalls in the past, is how we have used it. in order to maintain services. The next column, I'm going to relabel, and that is funding held for the 21 through 25 CIP that are planned projects. And that other column in the very last one, for example, in the general fund, that's your 6.5 million disaster reserves, right? So it's not really, you set that aside, we set that
Why
aside.
don't we say disaster?
In transportation, there are a couple of little items. I believe it is Shell Roads. It was a couple of other little things that are designated, and they're in your budget book under the reserves. Those all add up to 0.9. Same for parks. Parks has your excess beach concession fees. It has some other things that he's holding for 0.7. Now, in the internal service funds, that 24.7 million, most of that is your health insurance fund. Those are the reserves that you're holding for that, including your self-insurance fund. You have funds that are designated in your budget book that are dedicated for workman's comp, medical insurance, and dental. That takes care of that. And then the solid waste in the other fund, that is your landfill closure. And if you like, we can add a supporting document for this that defines each of those, so that way when you go to speak, it's very clear.
Yeah, I think that would be very good. I think, obviously, what people have done, and you know, hey, if you don't spend hours looking at this, I can understand why. They look at that bottom line, 500, and this is, of course, 500, what is that, 500?
Million.
500 million, that's what I thought. Before I said it, I want to make sure. 500 million, they look at that bottom line and say, my goodness, why would we ever talk about doing a dedicated funding for land acquisition? Let's spend that 500 million.
That's right.
You know, that doesn't make any sense. And,
Exactly.
you know, I can see that. It is a logical question.
It is.
But I think we just need to do a better job of maybe laying this, and I get it, you've done a perfect job from an accounting standpoint, making sure we got everything in the right column. I think that makes sense, but it is, you know, people are looking to say, and they're going to be looking, and it's going to happen more. I mean, we know that, you know, government is to help those who can't help themselves, right? And we're going to be hit with a lot of people like that, right? Mm-hmm. We just know that's going to happen.
So
they're going to be looking at, and what I think is probably where we have some wiggle room and we need to talk about it even, to define even better, is in the general fund and the MSTU. Because that's where I think folks will say, well, gosh, you got a pretty good and healthy, you know, fund there, but what might that be used for?
So what I can do, Madam Administrator and Chairman, if Sheila and I can get a few minutes alone with the computer, we'll get this updated for you today and sent out to you on an email, and we'll post this on the website with all of our documentation.
Misty.
Yes, thank you. And those are really good comments. And to add to that, I would appreciate it, Jan, if you could just quickly go over and tell the audience who's watching why we have a reserve fund, why we have a stabilization fund, what the differences are, what the state mandates, and what the industry standards are. And I think any time that we produce something like this that the public might get in their hands, maybe just some little asterisks, not a detailed explanation that kind of shows those things.
Okay.
Because I hear from a lot of people that we are flush with cash and we can buy anything we want. So.
Yes, I will be happy to. If we're starting with the 20% reserve, that's really one of the easiest. The national standard is the Governmental Finance Officers Association. They are the ones that not only review and provide awards for budget books, they also provide them for the financial statements. They're the ones that set a lot of the standards. Accounting standards are set separately. This is governmental standards that you're setting. So this is the best practice, is that you have 2 months of reserves for every taxing organization in order to recoup if a hurricane hits, if there's a natural disaster, if there's a pandemic. And we in Manatee County have 20% based upon a resolution that was done quite a few years ago by the board, to say, we're not going to do 16.6%, which is 2 months. We're just going to go ahead and round it to 20, and we're going to do 20% reserves. The next column, I'm sorry, which you,
I do have a question. So is the recommendation for a reserve different for a coastal community like Manatee County who may be hit by hurricanes? Or is it the same as we might see for Citrus County?
that's a very good comment, because at the end of the best practice, it literally lays out that if you are a coastal community or an area that is subject or prone to natural disasters that occur regularly, they say that it may be the best discretion to place more than the 2 months reserves within there.
Okay.
And because you're directly on the coast, although we haven't had a direct hit, and I better knock on wood really quick, yes, that is one of the things I believe when they initially started this 20%. I wasn't there, but I do believe that was taken into consideration, because you're a coastal community that is very prone to natural disasters could occur.
And so have we used these funds because we're a coastal community on things like red tide cleanup, tropical storm flooding? I'm trying to think of other.
Hurricane Irma.
Hurricane Irma.
Yes, we have. We've tapped into these before. Because Manatee has never had a massive hit, like when I was in DeSoto, which was a direct hit, we went through most of the reserves within 2 or 3 weeks. So we've never had that magnitude occur yet. And we've been able to work with FEMA, but that is the concept behind adding more there, that you'll be prepared, because at the end of the day, the citizens have looked to you to say, you need to protect us during this. And so that's the thought of the best practice.
Okay, so that's a fund in an emergency, and I always like to relate it back to my checkbook. So what I save money in case my AC goes out or in case my car breaks down, right? Because if you don't have that money, then you're in a jam. So is that a good?
I think a better analogy, using the analogy you're using, I would say that the 20% reserves is there to pay your electric bill, your health insurance, your rent,
if you lose your
or
job.
your mortgage. If you lose your job, if everything stops, if everything does not move, then that 20% is there. The stabilization, in my mind, is for a couple of things. If your AC breaks, in your personal example, that's your falling back on that you can do that. The 20% has always been more to maintain the day-to-day, because if these taxes stop for whatever reason, you still have salaries to pay. You still have commitments that you have to establish for this organization. So that 20% is for that. And then the stabilization, back in the beginning, I found in a budget book way before my time, but it started around 50 million. And overnight, literally, it seems like in 2008, property values just started decreasing at a phenomenal rate. That revenue stream went away, but yet the Manatee County was still trying to provide the services that it needed to keep us going. We needed to keep up, although we charge for the ambulance fees, there is a piece of the public safety we're still supporting with taxpayers' dollars to make it work. So when those revenues started going down in 2008 and 2009, we didn't lower the services that we were doing. We reduced every bit of expense we could, but then that we still had to dig into somewhere, and we dug into this stabilization. And over the course, when we went down in 2008 and we hit the bottom and then we started coming back up, it was a stabilization fund that helped us maintain. You never increased your millage during that whole time period. And that millage was very important, because even though a homeowner's house went from a $200,000 valuation to $150,000, you never raised your millage to get that money back to do it. You used the stabilization to make it work for your taxpayers, to the benefit of your taxpayers.
Right, okay, and so that does make sense. And then I think about from a private business standpoint, because I've been in that role before, and they move a little bit differently. And I don't know, is the government slower to make cuts in staffing? Or would you say that there is a difference? I mean, maybe when we are responding to these emergencies, we don't know the long term, right?
Right. I think maybe I could offer that this organization did respond immediately. I believe it was 300 that went down in 1 year.
320.
Yeah, I remember that year.
Yeah.
And so the organization, you, as the county, have a couple of factors, just like a private industry does. And maybe if I do the comparison, it'll help you.
Yeah.
With the government, when you get notification that your taxes have gone down, just like they occurred, right? Then the first thing you do is reduce all expenses that you can that are non-essential. And the county did that. Then it went a step further and said, what staffing do we need that is non-essential that we can make this work? And at that time, they dropped the personnel by 320. Is that what you said? I know it was over 300.
320.
But at the same time, it wasn't enough. It still was not enough. So at that point, you just have two options. You either reduce services or you increase your taxes. But Manatee had a third choice. They said, okay, we've cut out all the expenses, we've cut out our workforce, which 320 is a substantial part of your workforce. They also said, we have these excess stabilization reserves, and we're going to use that to shore it up so that the services aren't cut to our taxpayers. The roads still get done, even though the funding isn't there. Your nonprofits still receive assistance. Your community is still receiving assistance from you, but you did it because you were good stewards with your stabilization. So that was a third option for Manatee. Now, in the private sector, when you get hit like that, usually the easiest way to do it is you're just pulling back as hard as you can. You pull back every bit of expense you can. You pull back every bit of personnel you can. Only what you need to make a service happen, but maybe you aren't serving as many people, right?
Right.
It's reduced. But in this case with the government, you still have 400,000 people you got to serve. That doesn't go down.
Exactly.
And
Yeah.
that's the hard part.
And I will tell you, Misty, because I was here during a lot of that, what really was helpful to me was to see the stabilization fund and to see where it was going. And y'all know, a lot of that stabilization fund went into the medical, right?
Yeah.
I mean, we used to have a chart
9
that showed,
million, right.
yeah, would show you where that stabilization
Yeah.
level was and where it was allocated to. So we could see how that stabilization fund was being reduced, because it was the savings account for the county, right? So we were able to track that. We knew when it got down, I mean, and we did get pretty close, right, Sharon? I mean, you were here,
500,000.
Jan, you were
Yes.
here.
Yeah.
Yes.
We
Yeah.
drew that down.
Yeah.
To be
and-
able to maintain the level of, a level of service. I mean, obviously, libraries got shut down. I mean, we did a lot of things.
Yeah.
Right.
But, yeah, we were able to watch that funding.
Go away.
When I got elected in 2012, it really, 2012, we were still had the highest unemployment rate that I think the county had till now, obviously.
12%.
So 2012, we were still in that situation, right, Sherry?
Yeah.
I mean, I'm
Yeah, and
going
that's-
from what I
Sherry
remember
was
when I
here.
was running for office.
Well, and that's another
It's a big
reason
issue.
why in your budget where you see us talk, when we talk about the desired units, et cetera, why the budget's broken down into the base, the continuation, and desired units. We still have a budget set up with Jan's office where if something happened, we have a system of what the minimum number of people and operating that we would need in order to maintain a base level of service. Then we had a continuation, which was when we expanded services, what does that take? And that's why we really scrutinize the desired units so much, because then we're adding something new onto your overall budget, which you're going to have to continue if it's not a one-time expense. So that's why we scrutinize that so clearly, and it has to match up with the need for service, to keep service. And so that goes along with the entire budget.
Right. It is so different, and I'm still learning just how very different it is than private business. And a lot of people, the thing to say is, why doesn't the government operate more like a business? Well, because we don't make a profit. We can't go bankrupt. Well, I guess we could, but that would be really bad. And, we just don't have the same, we're not faced with the same problems as private business or the same objectives as private business.
Correct.
So I thank you for always explaining those details as often as you can, so that I can continue to learn them and so that the people watching can also continue.
I really appreciate the opportunity to go through it. And one of the things I wanted to say was stabilization. When I became director, I don't know how many years ago, but even when I became, it was low. Your stabilization was low. Well, now we're up to 19.8 million. That wasn't because we were able to plan to get there, but as the economy, the taxes came in better perhaps, or we got more money in, it wasn't because we planned for the ad valorem to be done that way. It's that we've, over time, tried to be really good stewards, and we've not spent everything that's come in, and over time, that's gone up. And this is the culmination of 3 or 4 years that you've gotten to, and we're half of what we were when 2008 hit. Now, when is enough enough? That's a good question, but I think right now you're in a good shape. You're in good, stable shape.
Right, for this year, and we've mentioned before, worried about 22. And as you were mentioning, Commissioner Servia, we're behind the curve in collections. Jan's going through, we have state monies that we have to account for, we have local, we have other issues. So it's not like as a private business where we could say it's all coming in, as profit. It's coming in different funds, and those are having to be balanced. And so we're still worried about what could happen in '22 because of some of these other factors that are playing out.
Yeah, I think what we're, just my opinion, which I don't know what that means, what we're seeing right now is a little difficult, right? But I'm worried about 21 and 22 because I think it's going to get much harder. That's just what I'm seeing.
Yeah, and it's very different because unlike what we saw in 2007, 2008, where people were leaving, what the heck? We have these huge numbers in building permits. People aren't leaving, they're showing up.
Yeah.
So we got to maintain a standard, even though we're going to have some difficulty. Steve, you've been waiting patiently, probably driving you crazy listening to all of us talk when you want to talk, but we'll give you an opportunity. Steve?
Thank you. A couple of questions, Jan. Can you give me, for the benefit, how much we have? Because I believe that 20% reserve is not just the general fund, it's every department in your budget has a 20% reserve. So if you take that 20% and add it up across the board, what does that add up to? And then, as you said, what has the stabilization fund grown to? And then third, you have a disaster fund, and how much has that grown to? So if you add all three of those together, what do all three of those numbers add up to? If that may be, maybe you need to get back to us with that answer. But I think, we need to look at, that 20% is not just in the general fund. From the way I've read the budget, every department, parks, recreation, utilities, everybody has a 20% reserve. So if you take that across the board, how much does that add up to? And then, like you say, we've been putting this money away for a stabilization fund. I think you said there's like 19 million in that now. And then we have the disaster fund. So if you added all three of those up, do you know what that total number would be? That would be my question number one.
Okay, if I may, So let me rephrase it back to you to make sure. So the chart before you on slide 25 represents every fund. And the way we calculate the 20% is not based upon department, but based upon fund. So right. So this represents 302.3 million represents 20% across all funds, all departments. Now, if you're asking me to try to break it down by department, I may be able to do that, but it will go a different way. There'll be a section perhaps.
No, so there's 320 million there. How much is in the
12.
budget stabilization fund?
300.
Okay, so 20% reserve, okay, so let's just take the general fund. So on slide 25, if you go to the top, 61.3 million is in 20% reserves, 19.8 is in stabilization, and the disaster fund is 6.5 million, so the total of all three is 87.6. So
But that's just the general fund.
Right.
That doesn't include all the other funds.
So if you do all the other funds, you go all the way down to the bottom of the slide, 312.3 million is 20% reserves, 86.1 million in stabilization across all funds, 31.5 has been set aside for future CIP, and then 69.1 is in the other, and that's where I broke down what those others were, and we're going to provide you a breakdown of all that. The comment I made. I'm sorry.
Somewhere between $400 and $500 million we have in reserves across all the funds, the stabilization fund and the disaster fund. Is that
Right.
fairly accurate?
500 million.
That is accurate, and included in that 500 million, for example, is your health insurance fund, your self-insurance fund, and, I mean, there's a landfill closure, so there's a lot in there. But yes, sir, that statement would be correct.
Okay, I just think the public needs to be aware of how much we have in there. So my second question is going back to the general reserves, the 20%. What could happen, in your opinion, that would cause us to have to dip into that? What type of catastrophic event, given that you have the budget stabilization fund and the disaster fund out there, and you burnt through all that money because of a hurricane or who knows what? So where, I can't imagine, absent maybe a nuclear blast, that, suddenly, we'd have to dip into that 20% reserves and all those funds, knowing, which is kind of a second part of my question, knowing that in reference to what Misty is saying, government accounting versus, government accounting, we know that, with government, unlike private business, every year people are going to have to pay their real estate taxes. So that income is coming in. People are going to pay their water and utility bill. So you're going to have a revenue stream in the worst of times. And yes, maybe the government, like we had to do in 2008-9, lay off 300 plus people, which is, very sad. But, private businesses, today, because of the pandemic, are closing, because they can't go back out and say to their customers, you eat here all the time, so you got to pay me a fee, just on a monthly basis for the privilege of coming in here. The government has the privilege of taxing these people, A, and B, should we burn through that 500 million on some type of, like I say, I can't imagine how catastrophic, and I understand we got to provide the services. We're very fortunate as a county to be in great financial shape. We could certainly, I'm guessing, because again, we have an annuity, i.e. ad valorem taxes, utility, those type of things, we could certainly go to a bank or our bonding company and say, we need to raise some more money to continue to provide these services to get us through these really rough times. So that's kind of, my thoughts is, it just seems like we have a lot, in my opinion, a lot of money out there, taxpayers' money, I might add. And, yeah, we've got, a rainy day fund, but how much is a rainy day fund? Your air conditioner goes out, so you have to put a new one in. Hopefully the new one you put in doesn't crap out within 30 days and you got to put another one in. So, that's where personally, when I always come out and say the county has a lot of money, I think the county does have a lot of money and can handle, but I just, I'm not smart enough, I guess, and maybe you could help me as to what catastrophic event would happen that we would end up going through $400 million before we got another infusion of money from your ad valorem taxes that come out in September, or people paying their monthly utility bills, or, whatever, we have a lot of different, unfortunately, the county is very dependent, I know, on ad valorem taxes. That represents a huge percentage of our revenue that comes in, which, is just an issue we need to work on, I guess, to diversify that some more. But, it is what it is at this point in time. So that's, I think, that, from where I come from, or my thoughts are, I just don't see where we would ever spend all this money, quite frankly.
Okay, and I'm going to let Jan, but I got a couple of comments too. So Jan, if you want to respond, because, Steve, you said we're dependent on ad valorem. No, what we're dependent on is growth.
Right.
Where does our ad valorem come from? It comes from growth. And we never, ever should forget that, because that's why we have the funds that we do. It's not because of all the people that have been here and are capped. It's because we've had growth. So what could happen? Growth could slow down. It's what's happening. It has happened before, and it could happen again. I know those are not words that anybody around here wants to. But if you look at where our revenues come from, they come from growth. Jan, you want to reply also?
Right.
But, but if you don't have growth, you don't have to provide all these services, Betsy.
Really?
So that's what our concern is.
Really?
So if growth disappears, then we don't have to provide as many services as we're currently doing, because we're not having that demand on growth. Hence, our budget should go down, not up.
Well, I think that'd be great, but the reality is that if you look at where the demand for public safety come from, it doesn't always comes from new growth. I remember arguing this when I was representing the Ritz-Carlton, right? They were coming in to build the Ritz-Carlton. I get it's in Sarasota, so it's a good example. And everyone was saying, oh my gosh, look what the amount of tax value that's going to be. And I'm like, yep. And you know what? Those people, they're only going to live there for a few months out of the year. They're not going to put kids in school. They're not likely to go to jail, the folks that live in the Ritz-Carlton. They provide the tax value, but guess what? Those demand for services are still there, even though they weren't coming. So I agree, perhaps we don't have to have as much, but the reality is you've got a pretty considerable base of people demanding services, and it doesn't all go away just because growth goes away. That's kind of what I think, but Jan, I'm going to let you answer too.
Hi, Commissioner Johnson. Yeah, I greatly understand the points that you brought before, and if I could, I kind of want to give you a couple examples of my own personal experience. So the 20% reserve, now remember, that is established by the Governmental Finance Officers Association. I keep pointing to that because that is the leader in the nation. All of your surrounding counties in the state have a reserve that they are holding on to for the same thing. There is no other county that is just sitting on 5% and saying everything's okay. This is a norm, between everyone, and I can give you a living example of why it is a good norm. I was in DeSoto, and I was the finance director whenever the storm hit. That storm was not supposed to hit us. It devastated our community. I can't even tell you, I don't even remember the cubic feet of debris. Every leaf was on the ground. Every limb was on the ground. We literally had to open up the artery roads of that area with a construction. One of our vendors brought in a front end loader and opened up the arteries. That's how bad. I now know how you rebuild a town. You have to get a bank going. You have to get a store going. It's very interesting. But from the financial standpoint, FEMA showed up, and these debris contractors and these people that are helping you reset this place up, they want paid. And they want paid immediately. So what happened in DeSoto is that FEMA came in, and it's always a great story. We'll be here to help you. You just fill out those receipts, and we'll reimburse you, and it'll all be good. We spent our reserves down to nothing. Actually, I remember going to the interim administrator saying, I don't think we can make payroll. And what do I do? And her response was, well, I need to get my check. And I'm like, we made it, but that is burning down, and they had 20% reserves at that time. It went away within 4 weeks. 4 weeks. That's what it took, because you're paying out to those contractors to come in. Now, that's what the 20% reserves really, in my mind, are for. They're for the disasters. You live on a coastal community, the chance, knock on wood, you have not had a direct hit. I hope we never do. But that, in my life experience, is why that's there. The stabilization, to me, is different. And the reason it's different is that we just went through the pandemic where there's lasting effects on your income. The first example I gave you is all of a sudden you have to come up with all these expenses to pay out, and you have to keep your salaries up. The second example is that the whole community is changing the way you're getting your revenues. And that is what's been happening to us. That's what the stabilization has been for. The other reserves we have, I would argue with any private business that the reserves we have for our health insurance fund are adequate, just as any business would have to have those reserves if they were a self-insurance fund too. So I wouldn't lump all of that in there with those items. So your $500 million goes down by 70 for the other. It goes by 30 for what you're building for your roads and your other projects. And really your stabilization goes down to 86.1. That 86.1, the point I was trying to make is that the only one that you can just use for anything is the general fund. So now you're gone from 86.1 down to 19.8. And that 19.8 is what helps you stay afloat. Next year, I fully expect, I don't know, when this started, I thought your revenue was going to go down for your ad valorem next year. I'm looking at these permits and I'm thinking, well, maybe we're going to be okay. Because the worst case scenario is that your taxes have gone down, that you get your sales tax, your gas tax, and your ad valorem goes down. Right now, you've got it like this, and that's why we're in such good shape. If both sides go down, you're going to have to cut services. And in government, that's a little bit hard, because the sheriff is not going to cut his service. The jail has to be maintained no matter what, so that you can't cut that service. These are all things that we can't cut to keep going.
Yeah, I'd bring up another observation here, which is a good place to just quickly throw in a couple issues here, along with what Jan and I have to plan for. So with this infrastructure sales tax, you have new facilities coming online. We have a new pool that's going to come into Palmetto, Lincoln Pool. We don't have the staff for that. The staff for that has to be coming out. If it's a program that's in the general fund, it comes out of the general fund. We don't have that allocated yet, and we look ahead and we plan for that. So let's say that's 6 new positions, just hypothetically. Those are going to be in your 22, 23 and beyond budget. That's not a one-time expense, that's ongoing. Otherwise, why would we build a new facility if we can't open or operate it? East County Library, that's another one. We've been planning for these things for a long time. That's a whole new crew of people to operate that facility. So part of what we, look forward into is the stabilization and the reserves as to if as Commissioner Benak mentioned, there's a decrease in the revenues from property taxes coming in and this ongoing income, we've got to be able to know, can we operate these places? Can we operate them at the hours we had projected them to? Are we talking about 1 day a week or all of them? So all of that is planned for the county in a 5-year kind of view, just like the CIP. So I want to mention that if we come to the point where we can't grow, then we'd be shifting. We'd say we've got a new facility, we've got to shift from somewhere else, because those are ongoing costs that come out of the general fund that we're not currently spending money on.
Yeah, and Steve, you're a banker. You probably understand this stuff way better than I do. Though I've learned a lot. I've learned a lot in my 8 years.
Jan and Sherry. Excuse me, am I going to get recognized?
You are next, Vanessa. You're next, Vanessa.
I still have the floor.
You do.
I just want to end it by just saying, Jan, Sherry, obviously, I respect you all greatly for what you do, but I also respectfully disagree with, the way some of the finances are handled. And, I know Jan and I, we've had a lot of discussions over this stuff. And I just, I think we continue as a county that, we're, absent, another 2008 debacle. And again, that lasted not that long. And now, of course, we have this COVID thing, and I'm as concerned as anybody as to how that's going to affect the finances in the county. But at the same time, I think, as Sherry said, we've got a lot of, anything from the pool, we got a lot of, operational things. But then I think those issues should go into the, the budget when it becomes apparent, which I think in some of that stuff as it comes online next year, we're going to have to add staffing to do that. And then we're going to have to, figure out where to get the revenue. And I just, I don't really care what the other counties do. I'm just concerned about Manatee County and, just trying to, I guess, make sure that we're getting, the taxpayer is getting his bang for his buck. And, I just don't see, we have a lot of needs out there. So to me, as we collect this money, I think rather than, in my opinion, hoard it, we ought to go spend it, and do the things that the public want us to get done from a transportation standpoint, from a safety standpoint, and I think we have the cash flow from my analysis in the county, to do those things. I know, again, Jan, when you talked about FEMA, it seems to me, yes, but FEMA does reimburse you a little bit. I look at this coronavirus thing. The county has gotten a commitment from the state for $72 million, which I think is a lot of money, and hopefully, as I've talked with Sherry, we're keeping every receipt, every nickel, dime, every, bill from Chick-fil-A for when we have lunch, because normally, we'd be at O'Brick's paying out of our own pocket, but because of this virus, we've had, so I think, the government, the federal government, on a lot of this stuff, yeah, we may have to come out of pocket in these disasters, and I understand, the concerns you had in DeSoto County where you burnt through all that money, but down the road, typically, FEMA, I mean, they paid us back, I don't know, I can't remember what our bill was that we put into FEMA for Irma for all that debris collection, but it seemed like we put in something in excess of 30 million, and I don't know if we've even gotten, but I think they finally approved maybe, 15, maybe half of it. And I know it's difficult to get money out of them, but, you know, we can limp along, but ultimately, we're gonna get that money back from the federal government and reimburse that stabilization fund or that reserve. So, you know, it's not like money we're gonna have to put out and not get a good chunk of it back in the event of a national disaster, I guess is my point. So anyway, but you guys do a great job. I just, you know, respectfully have a difference of opinion as to where the county is, you know, from a cash standpoint and getting the stuff done that I would like to see us get done, you know, for the betterment and for the quality of life of the citizens. So with that, I will, you know, shut up and, you know, let some other people talk.
Okay, Jan had a comment, then we're going to go to Vanessa.
Right, if I may, I completely respect you very much on your, and I've loved our conversations going back and forth on the funding and where it's going. The one thing I wanted to clarify, and this is experience, you know, when I brought up DeSoto, it's a small pond. But it's all relative. It just depends the pond you're in. It's the same circumstances, just different levels. But one of the things I wanted to bring up, when we went through Hurricane Irma, all of the debris came out of the landfill. You know, that's how we were able to use that funding for collection, and that's where the contract was at. If you noticed in solid waste, the debris, the funding there is $3.7 million in stabilization. The reason I bring that up is because it took you 2.5 years to get Irma back. And one of the things I wanted to make very clear about FEMA in this circumstance, when we received the money from the CARES Act and we were given that notification, when we started this, we were told, go to FEMA, look at that, and you're going to apply here and follow these rules. FEMA, out of nowhere, sent an email to the state of Florida and said, we are no longer going to help anyone on COVID. So they have that right. That they have that right. So now most of the COVID almost all of it has to go through the CARES Act. So it just please keep that in mind. I'm just trying to share what I know, because I think when you make decisions, I just want you to understand what I've lived and had to go through. So that's just that's just what I'm offering as my professional opinion.
Okay, Vanessa?
Wow. Y'all are choking me up over here. Sorry. You know, great conversation. Steve, I want to commend you on what you said. We do have a lot of cash. And yes, a lot of it is designated for this and for that and important things. But the point is, we do have a lot of cash. And the point that I wanted to make was that, you know, our citizens are looking at us now for leadership. They want to know how we're going to keep things going during this pandemic. That's our job. It is not to sit and talk doom and gloom. It is not to sit and talk about, oh my God, what are we going to do? This could happen, that could happen. I don't know. Are we going to be okay? You know, we're not going to see growth much longer. I mean, it's going to stop. What are we going to do? That's not what they want to hear. And that's not what they deserve. Our citizens are going through a lot. And no, I don't have COVID. I was just tested. So don't
So was I
get any rumors going.
yesterday.
My point that I want to bring up is that we are so blessed in Manatee County because we are financially in great shape. Are we going to have to maneuver? Absolutely. Any business owner that has ever actually really owned a business and understands writing payroll checks, I'm sure Priscilla would agree with this, so would Steve, they know sometimes you have to maneuver to do what you need to do, but you do it. And I was thrilled when I heard Jan and Sherry talk about this, they want to keep getting together quarterly to relook at things. I think that is probably one of the smartest things that I've heard this morning. They're absolutely right. Things are changing almost daily. I don't know if any of you've noticed, but we've been in pretty good shape since Monday on our positives. I don't know how it is this morning. I haven't seen anything yet, but I've been praying hard that we'll keep seeing good numbers. The bottom line is that this will pass. The bottom line is we do have a lot of cash. And if anything comes up that's catastrophic, and Steve, I agree. I mean, it could be a nuclear bomb that has to go off to hit us that hard. But the point is that we can maneuver. So I've been sitting here at home doing paperwork, as y'all know, for my sister. And I'm sitting here and I'm thinking, gosh, I'm sitting here listening to all of you like I'm a resident, and I'm looking at all of you. Let's stop with the doom and gloom. Let's talk about how we're going to move forward. We've got two great people at the county now who is handling our finances. Sherry and Jan are doing an absolute phenomenal job. The last couple of years has been fantastic. They've got things under control. We as a board will do whatever we need to do. But for heaven's sakes, there's no getting around the fact, guys. We have a lot of cash. And you know what? Jan's right. Most counties do, if they're smart. So let's think positive. I mean, I think we've got so much that we should be, saying prayers and thanking God for. Manatee County's in pretty good shape. And that $70 million that just came in from our governor to help with COVID was a shot in the arm and a blessing in disguise. We need to thank him immensely. Madam Chair, I would like to make a motion. I know we can't today, you got a workshop, but whenever. We need to send him a letter thanking him as a board for looking out for Manatee County the way he has with getting those funds for us.
You can make a motion. This is a meeting.
No, not yet.
I'm sorry? I can't make a motion.
You
You're in
can.
a workshop.
No, it's not. It's a meeting, guys.
It's a meeting.
You are in a meeting.
Oh, it's a regular meeting?
Yes.
We have action to
I'm sorry, I
take.
thought it was just a workshop.
No.
Yes, ma'am. Madam Chair, I make a motion for the chairman to sign a letter to our governor thanking him for the $72 million that Manatee County is to receive to help us deal with COVID.
Okay, we have a motion. Do I have a second?
I got a question.
Yeah, please.
I think there's some question about the 72
from the
million.
federal-
Carol.
70.5
It's from the
million.
government feds, it's not
70.
from the state.
It is
Okay, change it to 70.5.
Thank you.
It
Whatever
came from the
the-
federal government,
Not the state.
that is my understanding. It
Yes.
came from the federal government, and that in fact.
Through the state.
Through the state. And we do have numerous people, I believe, that worked on that to get the money here. Right now, Vanessa, it failed for lack of a second, so we'll talk about that a little bit.
You know
but,
what? That's fine. I'll send him one. Oh, thank you. Y'all go ahead.
Okay.
Thanks. That's all I got to say.
Okay. Carol, you're up next.
Yeah, actually, Congressman Buchanan called me yesterday, and I communicated to Sherry. Was it yesterday? Yeah, okay. He wanted to know why we didn't have our 70 million in our coffers and why was it still at the state. I called Sherry, she clarified it, that we're getting it, and the state has the money, but they're giving it to us in quarterly payments. He also heard it's because we didn't have a plan submitted, and actually we didn't have to have a plan, so I clarified that with him. So he is gonna work with Galvano and Sherry about the balance. So to be accurate, the federal government, because Vern said I worked really hard on that to make sure that you guys got it and you don't have it yet. The other states with a population above 500,000 did have to present a plan. This other money that came down with Vern Buchanan's help, we didn't have to have a plan for the first installment, but Sherry had said that we had one, we just didn't have to present it, we have one now. So we got the facts straight. I did want it because Vern put a call into me yesterday about it, and I gave him Sherry's contact info, and I don't know if they've talked yet, but he felt better when he heard, I don't understand like Steve, I'm starting to think like Steve a little bit, and this isn't up to me, but they've got our balance of our money, so they're growing interest. Why can't we have it and we grow interest? But
That's exactly right.
I'm starting to think a little bit like Steve there. But I wanted to clarify that. And a disaster. I wrote down Michigan and the green water. We just don't know what's going to happen. Something could happen to our drinking water source, Lake Manatee. You
you
just
don't have
never
green water, you're
know.
talking
I mean,
about Flint.
no, but I'm just thinking, everybody's thinking, oh, let's just spend that money down. The previous commissioner that just spoke every year for like 4 years had said, I want to cut the budget. And the previous administrators, and I don't know if Sherry has said, okay, tell me where you want to kind of present it to the board, and it's never happened. Jan, you do your homework very well. I like being conservative because of emergencies. I know at one point John Chappie in his little city had 6 months' worth of reserves.
Wow.
Because they'll crash, if they don't have it. I know all the cities had at least, I think John was the most conservative and had that many, but they have at least 3 months' worth. Steve said, well, I guess Betsy had kind of said, right now, the money we have is to support the population we have, 411,000 people. So if we cut now, we still got to provide those services. We still got to build the Lakewood Ranch is demanding libraries and other services, the people out east that are growing. We got to do that. And just so you know, I owned a business for 18 years with my husband, a medical practice, and I made the payroll. And for many years, I made more money than my husband did. I wrote the paychecks because we had to meet payroll, and we were one of the few physicians' offices that actually paid our employees health insurance. They didn't have health insurance, so I'm fine with and I'm glad we've gone in great detail over this. Jan, other means nothing to the public. Other, I heard you today meant our disaster fund, which is what I thought it was, but then you mentioned other things can come out of it. And to be clear, because I think our other commissioners had said we need to be clear so the public understands this. Is there any way that you can think of wordage to say besides other?
Yes, by the end of the day, I promise to provide you a document that's more detailed, that way it's very clear, because I put in other, the landfill closure. Other has all your insurance reserves.
That's what we need to see.
And that's what you need to see. And that's me realizing you're helping me realize exactly how clearer we can get this, because that's what you want to understand. You want you want your taxpayer to understand. You want your voter to understand. So.
And during Hurricane Irma, when it wasn't bad as everywhere else. I just remember Mike Gort, where we were saying we used our parks to store debris. And it wasn't like we could stop and take a loan out. We had our reserves to keep people working, and we moved all of our resources from all over the county to help utilities get things back up in order. So, if people of the private sector and the business sector is fortunate enough to have a reserve for the things that we've talked about, great. They don't expect our services to stop when something happens. They still expect their toilets to flush, etc. And that is why we need to be conservative over this, and I think we have. Everybody says we have so much money. Every year we look into this. We really don't. It is designated for important reasons, except for the 20% reserves. And you heard a great testimony from Jan, what happened in DeSoto County. Thank God the hurricane here just now went east and we're not going to get it, but we didn't know a couple days ago. That's all we need on top of this virus, because we're not going to be able to use the shelters like we did, and we're going to have to use that money to figure out what to do with the public that needs a place to go if something happens.
Okay, next up is Misty and then Reggie.
Yes, thank you. And so I want to add on to what Carol just said and what I previously said, which is this chart that we talked about. So the other column and the stabilization for CIP 2125, in my mind, this is money that is allocated for things that we must do.
Right.
And the reserves and the stabilization is
different.
emergency money. So I think it should be on a separate sheet, almost. I don't even think it should be included here, because we have to close the landfill, and we have to provide health insurance. I don't want to use the term slush fund, because stabilization and reserves aren't, but I just don't think it should all be lumped together.
Okay.
Just my opinion. It's $100 million
Yes.
of expenses that we have. And for me, I mean, I really appreciate Steve and Vanessa. I'm an optimistic person. I really do look forward to good things in the future. No doom and gloom from me, but I think it is our responsibility to look at the worst case scenario and the best case scenario every time we talk about money. I just think that's our responsibility. No, I am hopeful that things are just going to be fantastic. But I don't know. I don't think anybody knows. And if you asked me last week what this week would be like, I would have been wrong when I predicted. So there's that. And Steve's comments mean a lot to me too because of his experience, he's the most experienced financial expert out of the board members. And then thankfully we have Jan as well. So I do listen to what Steve says.
Me too.
So I was thinking more about the difference between private business and government. And on the government side, it seems like we pretty much know our revenues going forward. We have a good idea, but we don't know the expenses, the things that are going to come up. And in the private sector, you pretty much know your expenses, but you don't know your revenues. So it's almost like flip-flopped, I think back to those budget meetings that I sat through at King Engineering. So that's just an observation I have. And as far as FEMA, I remember during Irma that there were trucks, picking up all the recyclables and the down trees and things like that bypassed Manatee County and went to Dade, Miami-Dade. And why did they do that? Because the money was there and available and there was more work. So yeah, having that money to wave out there and go, please come help us, is really needed. Okay, I talked about the CIP stuff, talked about that. I appreciate hearing your, Jan, your comments on DeSoto County. So has there been a time since you've been with Manatee County that we've had to dip in to the reserves? And can you explain that? Because I know we've dipped into stabilization, obviously. But what about the reserves?
The 20% reserves?
Yes.
The 20% reserve, since I've been here, we've not had to do that.
Okay.
All right, we have not had to dip into that at that point. We had stabilization enough that we were making up the shortfalls that we had every year through that.
Right.
Now, one of the things I want to bring to mind is that 20% reserve, that's cash in the bank, right? So when you start the next year and you're worried about cash flow and all that, we're actually living on some of that until the cash flow all comes in for the next year. That's kind of how it works.
Oh, okay.
So if that 20% isn't there, you're going to have to go out, you'd have to shift everything that you're doing. That's why all the counties and the cities across the nation use it, because it's the way governmental works. But since I've been here, we have not had to dip into the 20%. We have in solid waste when we were doing Irma and we had to front some payments. You went into reserves. We did a budget amendment pulling out deeply into reserves for that. But overall, no, by the end of the close of the fiscal year, we had everything settled where it needed to be and it was fine. But that was the only time I can think of. We have dipped into stabilization from the time I've been here until a couple of years ago when it started going the other direction. That's how we balanced.
Later today, I think Jan's also going to touch on the whole bond issue, but that reserve is, your bond rating too, which allows you to do the other larger projects, especially in utilities and what we're looking forward to. And I know we don't want to get completely into that discussion right now, but we were listening to the comments that you made on Tuesday during that meeting, and Jan and I conferred, and she is going to talk about the bond rating and bonding later too. I just wanted to mention too about while the other thing is that Commissioner Johnson brought up, and I believe was also brought up here, was that we do have some new CARES Act money coming in. And I'm also, like he is, watching that, because a lot of that we've got to make sure gets out, and that would go out first. That we would make sure that that could get to everyone first. And you're hearing every meeting about any modifications to the CARES Act. And the fact that there is a plan, you've approved the plan, you've heard the plan since June, it keeps changing. The difference was, as was mentioned, was the counties that got the money directly from the federal government had to have a plan to receive it all at once. We're under the 55 counties that did not meet that population cap of 500 or more, and so our money's coming through from the state. And the state did give us guidance for that and said, we will treat it like those other 11 counties and one city did, and we will make sure that municipalities, constitutionals, and the community are recipients of it. And so that's what you see us going through at every meeting, is making sure we can do that. So I would agree with some of what Commissioner Johnson said, which is, how's that going to impact us, that influx of money? And that's why, again, we're saying we need a quarterly update, because that has to be spent right now by the end of December. And that is what we're looking at first. But it doesn't last long-term. It's one time. It can only go for COVID-related items, and it does not help us with public safety, parks, libraries, and all of those other programs that are out of the general fund.
I still have the floor, right?
Yeah.
Just one more thing. So when we do the little asterisk or something that gives us a quick, instruction on what these funds are, add that bond rating to the reserves.
Okay.
Because I forgot about that. That keeps our bond rating up. So that may be the reason, the biggest reason, that we keep that fund.
We've always said that.
If I may,
Yeah.
playing off what Sherry was saying about the bond, you don't have to have, usually a bond requires you to have reserves of a certain level, because you're going to have to make a certain level of payment every year. For example, I want to say it's around 20 million that the governmental funds are having to pay in a debt service, let's just say. You have to have 1 year's payment set aside for that. We
Right.
don't, because of our bond rating. Our bond rating allows us not to carry extra money, because they see the 20% in everything there, and they're secure with that. So that's exactly right.
That's big time.
It's all interrelated.
Yeah. And, for me, when I think of the expenses due to COVID, sometimes it's hard for me to imagine. And I think, $70 million, my goodness, that's like a huge amount of cash. Are we ever going to even spend it? And then yesterday, I was talking with Melissa Larkin-Skinner.
Oh, yeah.
And here's just one example, and she was saying that she has residents now at Centerstone. And those residents, and I forget, I don't know if there's 16 or 15, something like that, of the residents, each one of them is seeing 6,900 patients a year. I mean, cases or meetings, right? A lot. So they're doing a whole lot to hold up the mental health community, and that just got cut at the state level. So that program will go away unless there's other funding. And she was telling me how the virus has increased their needs and requests for mental health assistance.
Of course.
So,
Totally.
so there's just one example that, I really never thought about, and I'm sure that there's hundreds of others. Thank you.
All right, we're gonna take a
break.
few more commission comments. I'm gonna say a couple things, then we're gonna take a break. Reggie, and then Vanessa, then I'm gonna come back to me.
Well, just listening to Commissioner Johnson and Barton and everyone, I think the true question is, how much is enough, and where do we draw the line? And I'm not necessarily sure what type of analysis we would have to do in order for us to come up with that. But if there's an idea that we are surplus in certain areas, how do we approach that? You know, how much is enough? And we can see we're at the 20% within our reserve days, and I understand that. But we had to come up with an ideal and a strategy for us to say we're going to come with 20%. So why don't we look at a different focus lens and say, well, within these particular areas that we are at a surplus, how much is enough? Do we look at it, for example, the reserve days is 73 days. I mean, do we look at it by the day, by the dollar amount? I'm sure all that kind of goes together. But I think as a board, we have a responsibility to listen to our constituents that are concerned about the budget and that are concerned about the surplus and come up with a strategy to identify. We can draw the line here and still make sure we're prepared for that rainy day within those restrictions being acknowledged and doing things the right way. But how much is enough? I'm not necessarily, I'm sure we've looked at that from that perspective. Or with only being here less than 2 years, we may have, and yet that's how all the conclusions are drawn at this point. So I would like to hear your comments on that a little bit, Jan, if you don't mind.
I completely concur, because how much is enough? How much is too much?
Right.
And where does it belong? I do think you're at a point you're comfortable. You are doing good right now. You actually, I really feel like that if we just maintain where we're at, that's a good safety level. I think this board is so reactive that if you start seeing something altering, that you can come back and we'll shift. And it would be, and we can make different decisions. Do I think you need to go back up to 50 million? That was one of the comments somebody else made me to ask me about stabilization. I don't necessarily think you need to do that. But just know that where you're at right now is kind of the midway point. You're healthy, you've got a good bond rating, everything is where it's at, and I think if you maintain there, it's enough. I do understand what you're saying about wanting to give back. You don't want to hold on to too much. So the analysis that I make as whether we could, I kind of look at how things are going. And if I may, let me move you forward one step. The second page on this, let me show you, I think this will add a little bit of clarity. This is the next slide. And the last meeting, Commissioner Johnson asked us, well, what happened with stabilization between the 2 years? So let me get you oriented with the page. The first 3 columns are 21. The last 3 columns are FY20. When I came before you in May and we had the final numbers for 9/30, I updated it between the difference. Here's what I would like to show you. In the general fund, your budget stabilization went from 26.1 down to 19.8, so you are eating into it. And at the bottom of the page, what I really found the most interesting, if you look at the totals, the total in 21 was 117.6. In 20, it was 118. So overall, the funds, you only went down about, a little less than $1 million. But here's the difference. You have taken, where before you only had $25.5 million going into CIP projects, in 21, now you have 31. You've shifted your emphasis. Your emphasis, because of the taxes going down, you've had to make it up with stabilization. And so now your budget stabilization in 20 was 92.9, now it's 86.1. So when, this, having it at the levels you have it at has allowed you to shift and be able to maintain and come out healthy. I think if I'm saying enough is enough, I am not encouraging you to increase the millage. I'm not encouraging you to pull more in. I think what you're asking me is, do we have enough for doom and gloom? And I think you do. I think you're more than adequately prepared for doom and gloom. And I think you're adequately prepared to keep your bond rating. I think you're adequately prepared to handle anything that comes before you. Now, the decision of whether to make it lower, I would ask you, my professional suggestion is to do gently, because you don't know, you've got to be able to react very quickly to anything that's going on in the community. You're very solid But I do agree with you. I do not think go back up to 50. I think you're fine where you are right now. And it's taken us a couple of years to get there, but I can say that.
Yeah, and in listening to all of this, which, chair's prerogative, get to listen to everything and try to talk last. I try to do it, but I'm not always good at it. I really appreciate us walking through this, because I think it's very, very dangerous for people to say, we have $500 million in reserves, stop that. I really think that's dangerous, because it's not true. We can't spend the phosphate severance money that's in reserves. We simply can't. We cannot fund the tourist tax. We can't shift that around and spend that for roads. We can't do that. So I appreciate us breaking this down. Children's services tax. So let's say that because we have a 20% reserve, we know what happens there. I've seen that money go out in reserves. I've seen it go out for projects. Wasn't mentioned, but I've seen it happen since I've been on this board. I've seen money that's been in reserves for things like the dam go out the door. We can say that that's all money that we can shift around, but that's simply not true. Right. We can't just add up gross numbers and say we have that.
Correct.
My point on growth, I still think is valid. I don't think people understand that growth is what supplements our taxes. I get it, that growth causes a huge increase in the need for services. I get that. But be careful when you say, well, if we could just do away with growth, we wouldn't have these problems. I've said that since way before I was elected, and I'm never going to stop saying it. The people need to understand that growth is what allows us to keep our tax rate low. I also started out by, well, I think I did. I can't remember, so long ago. I don't think we have any need to raise taxes. Certainly do not. I'm not so sure we couldn't lower them a little bit. And that's what I would like to know. What would that mean? Because our businesses are hurting. They're hurting big time. And they don't get Save Our Homes. It's the part when we start talking about having excess reserves. But it's conflicting to me, because clearly we're in the great position we are, where a lot of other communities aren't. You guys read the news. I keep hearing about how the federal government needs to bail out local governments. You guys have heard this, right?
Yeah.
The federal government needs to come in, because a lot of places haven't had this kind of accounting, hasn't had this kind of reserves. We've been very fortunate that we've had incredible growth in our property values. We've been very conservative in how we've spent that money. We haven't gone crazy. We haven't done that. So we're in this position. So now we're in kind of an unknown. I'll be glad to say everything is going to be perfect and rosy next year for you board members. I won't be here. But you know what? I'm not sure I'd be telling the truth, that everything's going to be fabulous come 21, 22. That's not what I've heard from our experts. So, that's the question I'd have. If we were looking at any kind of a tax cut, what would it be? What would it do? We got to set the maximum tax rate today. But there's still opportunities, and maybe you change it during the year. I don't know if you can do that. Can you change the tax rate during the year?
Not the ad valorem.
Okay, not the ad valorem.
That you have to do it during this process, during the budget, because
So
it's once a year.
even though we set a maximum, we can't?
No, let me restate. You can, the only time today, you're going to set a tentative millage. You can't go beyond it, but you can lower it all the way up until September,
Right.
when we have the two hearings. But during the year, I think that's why I answered that way. During the year, you can't.
Right. Okay.
Once it started, it stopped. That's it.
But again, I don't want to, and I appreciate Steve's position that we have lots and lots of money. I'm not so sure the 20% reserve we should cut down. I don't believe that. I think the stabilization's good. We know we're going to eat into it. What could we expect to eat into it? And if there's any opportunity to lower taxes, I'd like to know what that might mean. But, We're not gonna build roads with this, guys. We're not gonna take all of our stabilization funds and start building roads. Which is, I'd love that. You know, we all know we're behind the curve on roads. But we can't take children's service, well, there's no stabilization in that. We can't take money in the tourist tax and build roads with it. That's just simply not true. So, you know, sure, we have some money, but most of that money came from infrastructure sales tax. So to all you folks out there saying we should never have done an infrastructure sales tax, how much would we be eliminating if we had never voted for that infrastructure sales tax? How much money would come off this?
It's like 21 a year, 21 million a year, right?
Jan,
It's 26 million a year.
$26 million a year, that's a lot of road building.
Right.
So, yeah, a lot of people can say, oh, we should never have done that. Really? Pretty sure the public voted on that, pretty sure they were right, pretty sure that we're trying to play catch-up, and that's a great source of funding. All right, well, that's what I've got to say. I just, you know, I try to sit and listen to everybody. I get it, Vanessa. I don't want to be doom and gloom. I don't want to say that growth might slow down, but it is a reality. It might. It absolutely might. So I got to deal in reality. You know, what might happen, what would happen to our revenues if it did. I think that is the job of a county commissioner, not just to be a cheerleader. So, okay. Well, any other, Reggie, did you have something you wanted to say?
I think I wanted to restate my initial question, and I think it was more like away from all of our restrictions that we have on these different allocations, you know, where can we draw the line as far as what are our options within there? You did a great job of kind of explaining why we shouldn't do certain things, and Jan and the county administrator always does a great job presenting it to us. I just think there's some potential there. We don't know what the potential is, but I think it's an opportunity for us to look into it with a different focus lens and then present something back to our constituents in our community. Now, that will take the minds of the financial people, not the minds necessarily of the board, because we can only ask questions. They're the experts. But I think my specific thing was when I'm saying, where do we draw the line? I know within restrictions we can't touch, but when they have allocations that are, that we could do some things with, what are our options? And look at to better provide. And I understand like children's services or tourists, I get that part right there, but we do have some options. We do have some options. So I was just wondering, would we be interested in looking at it? And that's not gonna be done today, I can guarantee you that.
Priscilla.
You know, I listened to this, I think we're in a great position. We're not worried about are we going to pay the phone bill, are we going to pay the, you know, the electric bill? So we're in a great place. Also, remember, this gives us options to do things. In 2008, we built a lot of roads because we could bond.
We can hire
A lot of places,
right.
we could hire people, and we're like, so we kind of like, okay, we need to keep people working, and we're able to go
Right.
out
That's what
because
we did.
money got cheap, there were plenty of labor, so we got things done. If we get too tight, or whatever you want to call it, then we don't have options. Then you're just saying, oh no, am I going to meet payroll this week? Oh no, do I have enough money? So, you know, I think we're in a good position. I think these are good questions we're asking, but you need to remember that cash gives you a lot of options.
For jobs. Jobs.
I've always found so.
You get a break now?
All right.
As a person that probably has the most
We're gonna
cash in their
take,
pocket.
how long of a lunch break you guys want? Or you want to come back here and listen to
30
public
minutes.
comment during lunch? I know you guys want to do public comment. You want to take like 15 minutes and bring our lunch in here?
Well, do we want to hear Mike? He's the only public comment here.
Let's go.
You have a 1 o'clock time certain.
Oh, okay.
We do?
All right, well, let's do public comment
Yeah,
since
let's
Mike's
do
been
Mike.
sitting
Come
here
on
all
up, Mike.
day. And he is the only one here. So we'll definitely take public comment before, we
You're
might have
welcome.
people on the phone, I don't know.
Commissioner Beck, I haven't announced the number yet, but it's on the agenda, but I haven't
Okay.
said it yet.
All right, we're gonna take we're gonna take one person
just
in
leave
the
it
audience,
here,
public
Mike.
comment, then we're gonna
We're
break
not
for
allowed to
lunch,
touch
and then
it,
we'll
and
take
we'll
other
break-
people
and
that are
they're
on the
gonna
phone. You can make that
You have to.
announcement.
You got to give it
You
to
do it.
them. We can't. We're not allowed to.
Takes a minute to get people on too.
Go ahead and make the announcement.
Thank you, Madam Chair. I'm John Osborne, County Administrator's Office. For folks that want to call in and give comments to the board today, the phone number is 888-788-0099. That is a toll-free number, 888-788-0099. And there's a meeting ID you need to enter. It's a little bit of a long number, so get your pencil out. 5109-0949. Again, that's 811-510-0949. And with that number, you'll get in our queue, and when it's time for the board to request for folks who dialed in to give their public comment, I'll give you some more instructions at that point. I'll ask you to dial *9. It'll show me that you're ready to give some public comment. It'll raise your hand virtually, and we'll be able to get the comment, things that you have to say to the Board of County Commissioners. Commissioner Benak?
Okay, thank you. We're opening it up to public comment. We have one member of the public, I believe, that is going to be making some comments. He's getting his paperwork together.
This is the Mike Meehan, Manatee County citizen. This is the work that my son and I did over the last month, compiling statistics on 50 Florida counties and their reserve positions. So it's real small print.
Oh, yeah.
And if you're in bifocal land, like I am, it's a little bit tough, but I'd like to publicly commend my son, Patrick,
Yes.
for putting this information together. If you just go over the top of the page, you can see the categories: population, revenues, total expenses, surplus, property taxes. Surplus as a percent of the property taxes, total unrestricted cash, maximum allowed unrestricted cash, excess unrestricted cash, and then excess unrestricted cash as a percent of allowed. This is put together with the idea that the state of Florida, under Florida Statute 12901C1 and C2, allows 10% reserve for contingency and 20% reserve for appropriation. So the maximum reserve on the Florida books for counties is 30%. In other words, whatever your expenditures were for, let's say, 2019, which is what this document covers, whatever your expenses were, which for Manatee County last year was about, I think, $683,000, that's what million, that's what you spent last year. You're allowed to keep in reserve 30% of that amount. So as you go across the top of the page, you'll see that our surplus last year, which was $141 million, Manatee County surplus last year was $141.2 million. As a percent of the taxes collected, which was 239.5, our surplus was about 59% of the property taxes that we collected. And our total unrestricted cash at the end of last year was $559 million. So people are correct when they say we've got a lot of cash, because these numbers are right off the CAFR report that's filed by the clerk. The maximum allowed unrestricted cash based on the 30% rule is $204.9 million. So 0.3 times our expense. So 30% times 683, we're allowed, according to Florida statute, $204.9 million in reserves. So that means we have excess unrestricted cash of $354.8 million. So when you go down that category of unrestricted cash for all of those counties, and there's 50 of them listed there, there's only one other county that's got excess unrestricted cash out of the whole state besides Manatee County. And that's Pasco. They've got $8.9 million. Everybody else is in deficit in terms of having excess unrestricted cash. So that may give you a little perspective about the questions: what's enough, what's too much. I'd also say look at the bond rating covenants for the bond rating for Manatee County. Examine those covenants, take the difference between what you've got and what those covenants require, and that's also the money that you can spend that won't change your bond rating. So I'll try to repeat that. There are debt covenants on your bonds, and they say you must have this percent, that percent, blah, 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 current assets, liabilities. Those are spelled out in the debt instrument that that's promulgated. Look at what those minimum requirements are, subtract that from what you've got in cash, and that's what you need to do as far as surplus funds. That might help Commissioner Bellamy come to grips with that.
Okay.
You know, how much is too much, how much is, not enough.
Can you wrap up? I'd let you have a little extra time, obviously, since you've listened to us.
Anyway, this took us a long time to do. I hope you look at it. It's based on numbers from all the CAFR reports filed by all the counties that filed as of June 30th of this year. Thank you.
Okay, thank you.
Thanks for all the homework, Mike.
Yeah.
Good job.
Okay, is there anyone else in the public that would like to address the board on this issue? Do we have anybody on the phone right now?
Yes, Madam Chair, we do.
Okay, go ahead and ask them to undo or whatever they do.
So caller with the last three digits of 874.
No, we're not gonna
874,
discuss.
you've been unmuted. Please state your name for the record. You have 3 minutes.
My name is Kathy Woolley, and I live in Tara, and I only have one comment. You've spent a lot of time in the last 18 months looking at stormwater management, about potential fee increases related to stormwater management. One reason maybe we should not be running our reserves very tight is because we don't necessarily have to increase fees for stormwater management. Maybe we could simply draw from some of the funds we have already. There's long delays since the last stormwater studies that the county has had, and you've approved a few, but the others are quite a long distance out, 2025 even. So it's not clear yet how we'll ever solve our flooding problems exactly, but being too tight on our budget would be a real problem. Thank you very much.
Thank you, Kathy. Anyone else that's,
No, Madam Chair, that's all the callers we have.
all right. I would like to break, then we'll come back and talk more, but I think it's time for a break. If everybody can hold off, we've heard the public comment, we got more talk, more discussion, no doubt. You guys want to break till, what time is it? We'll break till 1 o'clock, okay? Because we have a 1 o'clock time certain?
Yes, ma'am.
Okay, we're going to take a break till 1 o'clock. Save your comments, save your discussion. This is good that we have the whole day to do it, and we'll be back at 1 o'clock, okay?
Okay.
But we're recessed till 1.
Okay.
Oh, hello, hello.
But I do like the budget. It's one of my favorite things.
All right, we're going to reconvene. We have a 1 o'clock time certain. Sherry, I don't know if you want to introduce.
Yes, I'm just going to introduce Public Safety Department Director Jacob Sauer. Yesterday, we decided we would need to do an update to this board about the impending storm, and we have some new details, so take it away, Mr. Sauer.
Good afternoon, Commissioners. Jake Sauer, Director of Public Safety. Today I was going to come to you with a request, but I'm happy to report as of the 7 and 11:15 a.m. update. There's a little bit of better news, so we'll go through that. Real quick, Tropical Storm Isaiah formed overnight and is moving northwest towards Florida. The track forecast shifted east overnight, which is good news for us locally. Current maximum wind speeds of 60 miles an hour. It's expected to remain a tropical storm throughout its life at this time. Through a few models, bring it to a hurricane strength, depending on how it makes it out of Hispaniola. So if it can reorganize after it comes out of Hispaniola, it could reorganize more stronger and turn into a Category 1. Some things with that, though, is if it does get stronger, it's projected to move even farther east. There's no watches or warnings in effect for Manatee County yet. Expected arrival time Saturday afternoon in the evening. Main threats will be heavy rain, flooding, wind, and some marine hazards. And forecast should become more certain after the storm passes Hispaniola, as I mentioned earlier. Some good news today at the 11:15 update we had with the state call. We're just a small portion of the eastern portion of Manatee County is remaining in the cone as of this update. I will caution you, though, it still has to get through Hispaniola before it can reorganize itself, and the track could shift again. But more and more experts are agreeing the track is going to shift more towards the east, so the east coast of Florida, and not have a greater impact to the west coast of Florida in our area. The National Weather Service is anticipating tropical storm watches for the east coast of Florida later this afternoon and evening. And as I said, as it comes out of Hispaniola, some things to remember. If it can organize itself better, it's a more defined storm. As it sits now, even going more east, it's sort of like a big blob, which will be a rain event for most of Florida as we move through this. It's a large storm, like I just mentioned, 300 miles in diameter, and it's all dependent on how it makes it past Hispaniola before we can further define what this storm will look like and our impacts. But this graphic here will give you a great quick overview of what we're looking at. In terms of wind, we're now down to 30% possibilities of tropical storm force winds in Manatee County. Surge is minimal. Rainfall will be most of what we see from this storm, providing that the track still remains true after it comes out of Hispaniola. River flooding, minimal to none. Tornadoes, minimal to none. And of course, as we all know in Florida, anytime you are dealing with a storm in the Gulf or the Atlantic, probably not a good idea to be out on a boat. So some actions to date. We were going to request a local state of emergency for this storm, as yesterday's track was not looking the best for us. But with more and more experts in the latest tracks, we believe it's going to shift to the east, which will put us out of any dangers of the major dangers of the storm, and we don't believe a local state of emergency is appropriate at this time. MSO, the Sheriff's Office, has flown an aerial operation to video and document the pre-storm Gulf Coast of Mexico, and that's important for FEMA. They want to know during a storm what it looked like prior and what it looks like afterwards. We have released, our PIO has released one yesterday and more as we go through this, updates to urging residents to make their plans now, have supplies on hand, and an evacuation plan if they're in low-lying coastal areas or mobile home parks. That's still remains one of our biggest concerns when we talk about storms and dealing with COVID-19 and the reduction of sheltering space in the county and all over Florida for that matter. There's been an update to the state COVID testing sites. Yesterday, the state advised us that they were going to close all state testing sites in the state of Florida as this storm approached and until after it moved through the area. On today's 11:15 state call, they're rethinking that, and they're believing the west coast of Florida, including our area's state testing sites, could remain open, and they're going to make a decision on that at 5 o'clock. The EOC remains at a level 3 activation for Tropical Storm Isaias, and we'll monitor that through the weekend, definitely through tonight and tomorrow as the track becomes more firm. And as always, we're at a level 2 activation for COVID-19. So going forward, we'll engage with the National Weather Service, National Hurricane Center, and the Department of Emergency Management at the state level to closely monitor forecast changes, obviously respond to and submit any state requests that we may have because of the storm. We have our protocols for COVID-19 with sheltering as well as the Emergency Operations Center already in place. Document pre-storm conditions, we have done that, and obviously share all of our information with our partners and the media as we move through this. So some key messages: tropical storm force winds possible this weekend, unlikely at the current track. We do have a potential for heavy rain, and again, has shifted east of our area, more focused on the east coast of Florida. As it goes through Hispaniola, obviously, that's going to better firm up our tracking, and that'll occur later tonight, first thing in the morning. So we'll have a better outlook as we move through this. But before I end, it's important as we move through this. This is a good wake-up call for our residents. Now is the time, if you haven't, to make plans for your family to evacuate. If you live in an evacuation zone, you don't have to go hundreds of miles. You can go 10 miles out of an evacuation zone if you have friends or family that you can bunker down with. Like I said, COVID-19 has really posed a problem for us at the state level and all the counties for that matter. With social distancing, we're really encouraging folks to start making plans now of better places to go instead of the shelter. And as always, Manatee residents can receive information, any important information regarding COVID-19 or storms that we push out by texting Manatee Ready, all one word, to 888-777. With that, I can take any questions if you have them.
Okay, Priscilla?
Yeah, mine's more of a housekeeping question. We are in a state of emergency. Do we actually have to declare another one? And if so, do we need to designate it like a state of emergency virus, and then we'll have a state of emergency storm? I mean,
That's a good question.
I mean, so when we're voting on it, I mean, I'm just.
That's a good question.
I've never been under two state of emergency at the same time, personally.
No, and neither has Manatee County, for that matter, that I can recall. But you already have a local state of emergency dealing with COVID-19. If we do have a storm come up this year, each one will require its own local state of emergency. It's its own funding source. It's its own tracking source with FEMA as well.
I'm wondering if we should name them, kind of like hurricane season, you know?
Whatever. That'll be nice.
Other questions for Jake this time? Okay, well, mostly good news.
Mostly good
We all
news.
need to stay tuned. See Steve back there. Steve, did you have anything else you wanted to add? No. Okay, well, that's good news too, and I guess we'll find out tonight whether or not the testing sites are closed down.
Yeah, at 5 o'clock, they're going to make a decision. We also have a 5:15 state call, so we'll be updated on that. And we'll certainly get that information out to Nick as we move forward with this.
All right, well, thank you, and, yep, we'll all be aware and stay tuned, and hopefully have a relatively quiet weekend. And
Thank you very much.
Thank you.
Thank you.
We already extended our emergency, right, last meeting?
Yeah, we extended it for another week, so.
The CARES, yes.
All righty, now, Jan, you got more?
Hi, I have, if we can put that back up, Sheila, we have just a couple of more slides, and then I think, yes, we're good. So I think I just wanted to talk about the pulled items in your packet that we left on your desk. You'll find a piece of paper stapled together. Sherry, if you could hold that up, that's an example. We took notes during the CIP meeting. So there are no pulled items that we know of, but there's lots of notes of what wants to happen. And you'll notice in the very far column, there were requests that they wanted to move ahead with certain CIP projects and requests that you want to do. And we noticed several items that you required more information. We'll provide that information during the month of August. And for the requests, that'll be something you remember at your second public hearing. That's the next time we talk about CIP. So we'll come back to you, and by that time, we'll also maybe have more ideas and information on what's going on with your taxes, that we may be able to provide more and try to get a lot of those things accelerated that were brought up.
Okay, Priscilla?
Well, I went through the decision unit summary book, and I have kind of a list, but like, I know this was kind of, to me, was a different discussion. I'm fine with what you're saying, but I also know that, like, the libraries are still not, you know, and some of these other units I had. So how do we want to handle that? Just kind of turn them into y'all, or you want me to go through them, or?
No, I think we can, if you want to quickly, for Jan's purposes, if there's any comments on the CIP, you could do that right now and what she's mentioning there. And then as soon as that's closed out, we would like to hear from you on those. I think it's possible, the other two commissioners on the phone too need to be given an opportunity. They may also have some comments on the decision unit summary as well. We would need to know those now, today. before we leave.
But we're working off of this sheet right this second.
No, ma'am. Yes, just for this second.
Okay.
We'll work off that sheet. I was just bringing you up to date that we'll be providing more information on the items that have requested information beside of them. We tried to take notes for everything that was listed, and we also tried to note if anybody requested anything. So we'll be coming, the next time you do the CIP fully is the second meeting in September historically, is when we do it.
Well, I do know that I have one where we were talking about Ellington Gillette possibly being able to partially four-lane it. And after further discussions that, with all the permitting and stuff, we're gonna be able to improve it, but we cannot four-lane it because it would take too many years to get the permits. We have the permits to do what we're going to do now that's in the CIP. So I think some of these might be slightly outdated just for information that's coming out. So.
I think what we can do is update again right before we go to that second, as soon as September starts, and we can provide all that for you.
So I just want to be clear. So this list, we're going to discuss this when we talk about the CIP?
Yes, unless you want to discuss today, but what I was just wanted to provide, I guess I confused everyone, and I'm really sorry. What we were trying to do is provide you notes from the CIP meeting.
Okay.
And usually what we do, if anything was brought up to be pulled, it would be inside that list. Nothing was pulled, but there was a lot of items that had requests to move up in the time frame, and also a little bit more for information. So I just wanted to let you know there's your copy of it, and we'll be providing in August the requested information. And then the next time we really go to CIP is when you adopt it at the second public hearing, but it's your prerogative to talk about it whenever you need to.
Yeah, I think what we wanted to know today was we wanted to share the notes that Jan's office prepared that you discussed on the CIP portion, give you a chance to go through those. We're going to continue to gather the information, and then if anybody remembered something today that you want to add on to the list so that we can get the information for it prior to that public meeting for the CIP, we can do it. And then we wanted separately to go back to your decision unit, which we did not go through individually, and see if anybody wanted to discuss some of those after you finish the CIP questions here.
Okay. All right. Board members, you got any specific questions? We're not going to talk about the CIP in detail today, unless there's something that you think is missing, I guess, is how I would categorize it. Reggie?
So I had talked to the county administrator about this, and this is in reference to East Bradenton Pool. Initially, I was under the understanding that the scope of work would include another basketball court along with what's written up, and that's not in here. And the other thing that I saw is the timeline, and where all the project was supposed to come at one time. And I asked the county administrator to look at it, but there's been no changes on it. So I just want to be able to talk to you all and Charlie about that.
How about I put it on this list so that it'll come back, and when we go, I'll make sure it gets to the list. I apologize for that if we didn't include it, but we'll definitely, and the main thing was the description, you wanted to make of what was inclusive of it, and also.
That's the bottom line.
Timeline. And I think what I'd like to say to the board too is if there is some sort of a resolution to one of these items that we can update you on at a board meeting between now and the hearing, if there's something that's already in place, we can do that as well.
Okay, Carol?
Unfortunately, I did it during the break, and I wrote it on a Post-it note, and I know. The CIP, page 9, 661 million, fully funded out of 832 million. And I'm sorry, I guess I need to have the book in front of me. That's why, well, I have the book now if we're going to go through it. And then I wrote page 37 of the boat ramps. The money or the date wasn't correct. I think that was probably the Palmasola boat ramp, maybe. And I know this is the CIP, but I've never seen where the county attorney has reserves for the risk management department. You know, when I was a risk manager, when somebody fell or broke a hip, we allow so much aside because we just had a big payout not too long ago that we had to pay. and I'd asked where that came from. And I don't think we have a reserve for risk management, do we?
Yes, you do.
We did.
Where is
You
it?
do. It's inside your internal service funds, just as your health insurance is, your
It's not in the
self-insurance
attorneys,
is.
though. Shouldn't we at least show where that is, that we know that the legal department has a reserve, or no? I would have never thought to look there. See what I
I
mean?
think, yes, and I think what you requested earlier, that we break down where those reserves are, it will stand out in there, because it's about 9 million that's in there.
Okay, and let me see, patient healthcare advocacy pilot program? I don't think that was CIP, sorry. Public health
No,
unit?
it's not in the CIP.
What about a public health unit? Is that a CIP? 1.0,
That may be,
037
yes,
mils?
yes, that may be the request for the old morgue to be retrofitted.
Right.
For office space for the health department.
oh, that's what that was? Okay, yeah,
Yes.
because right now it's empty. We got the
Yes.
new one. Okay, so
Right
that's the
now,
old one.
what we did with that, just as an FYI, is when we were concerned about COVID and would, in fact, we need a backup instead of bringing some, trailers or anything else in, and the fact that the hurricane season was coming, we made sure that the old morgue was usable. So when we get past hurricane season, that's something that could be considered. And the health department has asked for it to be renovated for office space, and due to the expansion of their services.
But right now, we'll keep it until this
We're-
COVID issues.
That is our recommendation, is that we keep it right now as a backup morgue.
Okay. And then the patient healthcare advocacy pilot, that's on another funding that we'll talk about later.
That's in your health.
Sorry, I
That's
I
your
was so proud of
healthcare.
myself making notes, and
That's in
I
your
wrote what
healthcare
pages, but
funding.
sorry about that.
It's okay.
Okay, all right, so everybody's gonna look over this list, make sure they got everything on it. If you need to add
Yeah.
something, do so before we come back to discuss the CIP in particular. We're not gonna discuss it today, but if there's something that you think needs to be clarified or needs to be on there, let Sherry know.
Yep.
Is that clear? Okay.
Okay.
All right.
I think the other thing, when we got to the pulled items, because this budget year has been different, we haven't had a lot of the meetings we normally have. Because usually you go through the meetings and then you pull what you'd like to discuss. So I think now, if there's anything that you'd like us to discuss or research, we'd be happy to.
Okay, and for the most part, I mean, there's been limited additions due to the situation that we've had a lot of additions to staffing last year based on, the funds that were available, not so much this year, right? Sherry?
Yes,
Is
we
that-
had a lot of increase in demand. Our population, in the last 3 years had grown rapidly, and so we met some of those demands last year. This year, we tried to make that limited, and then we mentioned to you that as we are talking about coming back quarterly, if something is pressing, that we would come back at that time as well. We also did not have any of these new responsibilities that we temporarily have with the CARES Act, which are really impacting the Financial Management Department, Redevelopment Economic Opportunity, Neighborhood Services Department, and Public Safety. And so while there are some costs potentially that could be eligible, I want to assure the board that we're looking at each one of those to see if those are really just fall into the COVID expansion or whether those are longer term.
Okay, and the only other thing I was thinking of is, as we went to a remote workspace, kind of understanding how that might affect our need for additional space. I hope we look at that.
Yes,
Okay.
yes. Would you like me to talk about that real quick or wait?
Sure,
until-
sure,
Okay.
if you want.
The fifth floor construction that was approved in this year's budget is coming to an end here rather soon, and we're hoping, we're anticipating that's going to be completed before October 1st. By doing so, then there are some renovations to the fourth floor, which is where your Building and Development Services Department is. And the interesting thing about that is that, prior to March 2nd, you know, we had a lot of people, so to speak, shoved into a lot of spaces down there. And so with COVID and in line with doing our 5th floor renovation, it's worked out that the 4th floor was needed. We still, we have a few other options. We lack some options, but I will say that Charlie Bishop and I continue to talk about the Merrill Lynch building next door as an opportunity for slight expansion. And then we have the GTE building, which is on the north side of our building. So we're continuing to look at those to see how those are doing. With space, again, with teleworking, we have made the statement that we're going to try to continue a 75-25 split, with 75% of the staff available in the field, on site, in their offices, wherever the public needs to be served, and then a rotating sort of 25% in total would still possibly be able to telework. And so that's made a big difference and has allowed us to take a little bit longer to look at some of the spaces. But we're definitely considering those in each one of the regards to that.
Okay. All right, good. Priscilla, then Misty?
Now we're on decision units? Okay, just wanted to make sure.
Yeah.
I had a couple, would love to see some more help in the library. There was one, a part-time library help, like 3 part-time people, which was decision unit, page 89 on the decision units, 3404, number 19, and then also number 21. Our libraries are still well underfunded. We've had a lot of retirement in them. They could really use some help.
Let us get to that. We're going.
I'm on page 89 in your decision unit book.
Are we going through our book?
I didn't know
We
were
usually
going
go through the
decision
book.
units.
We had not planned to go through the book individually. We are planning to follow along with each one of you and what you've studied over the last 3 weeks, and if you wanted to bring something up.
Okay.
And so
Okay.
we're on this first one, which is in neighborhood services.
89.
You want my
Hey.
whole list or just kind of the
Well,
ones
let's
I
just start
really,
with-
really
No.
wish list?
Can we just start with this one?
Yeah,
I'm
one
just-
at a time.
Let's get the lay of the land,
Okay.
and then we might do better.
Well, wait, these are unfunded at this
Unfunded.
point.
This is what we normally used to do where we actually had to have a friend.
Yes.
And it would
Do you
become a
have-
flag.
Do you have a
flag.
proposal where the funding would come from?
Right,
I
because
do
we're having a
not. I'm
recession.
hoping for that. I thought we had an extra $500,000, but then I did not realize that actually $500,000 was going to cost us $600,000. So
And it has to be
I may have to
recurrent.
fire someone from the library.
Which,
I'm not
and
sure.
which decision unit is it on page 89, under neighborhood services? I'm on that page,
And
under
has
the
Number
library.
19 and number 21, number 3404 is the decision,
Okay.
whatever.
And that's
Whoa.
part-time library staff, 3 head count, 66,632.
But no, that's more like if we end up
every
with
year.
more money, which sometimes we do, sometimes we don't.
Not this
You know,
time.
And number 21?
yes.
Okay.
If we
What's
can.
Number 21 is a library system staff expansion for 4 additional staff at
Whoa.
207,000.
The way I understand it, this has always been a wish list kind of thing. You just hope.
Can I ask a question about libraries? I mean, I know you're.
Because I can't do.
Yes.
So where do we stand as far as library hours today?
We-
What kind of library hours do we
Yeah.
have?
Our library hours are the same. We have not reduced them. We have not increased them. You have your branch libraries are open Tuesday through Saturday. So the branch ones they have varying hours. There's always a library open in the evening, at least somewhere in the community. The central library, your main library, is open for 48 hours a week, which is Monday through Saturday.
But we're having distancing. I assume we're reducing the crowd. We have to, right?
We're
We have to-
actually, what's happening there is, we've asked people to utilize the library, but not spend the entire day there. We've asked them to rotate so that
Right.
the same amount of people can utilize the library, but just not come and hang out all day. They come, they can check into their email, they can look for resources, and we try to ask them then to rotate out.
But just from a service standpoint, my
Serv-
assumption is we're not providing, we're not having
Oh, we have no
kids
program-
coming
correct.
in, or we have no programming.
Correct. Right now,
So-
we do not
Need
have
help.
the programming, like, for example, the summer programming, We were,
on.
had to do that all virtual, whatever we provided.
Right.
There's no meeting room usage right now, and there's no groups. So a lot of people, a lot of nonprofit agencies and groups that are used to having their meetings in the libraries are really limited.
They're doing
Right,
Zoom.
we're not, I mean, you know, we've had incredible programming there, but it's not happening. So I guess
I know what
I
you're saying is we don't
understand.
need it, but I'm just saying we were way understaffed before COVID. That's all
Yeah.
I'm saying.
Yeah.
We have run understaffed there. I think one of the things that we had, our progress through the library division was in an effort not to pile on 25 new positions when the East County Library opens up, but to add, you know, a number over time that could be rotated throughout the community and to learn their job. And so we just didn't feel we could take as an aggressive stance as we had in the past on this, but that's why these requests are in here.
I agree on that. I can't second it.
No.
Sorry.
I'm not gonna.
All right.
That's too much
That's what I was
money.
gonna ask, is that what we're doing? We're gonna do it if you have, okay.
Trying to.
I have a couple of them more, not saying that I actually want them pulled as much as Public Works, page 181, number 20, which is a pretty big number, so I know we're not gonna get it. Once again, we are way down on shell. I talk about shell on roads every single year. I know at one time we were hoping to start paving some of these roads. That has not happened. So I'm just saying shell, I know to y'all that all live out west, it's not a big deal. It's a big deal for me, and I assume it is for Vanessa. And also on page
Did you
240.
say what number that
you
one
said
is?
Oh, sure,
20.
sorry. Page
Please.
181.
Yes, ma'am.
Oh, okay.
Number 20. I
Number
believe
20.
it's a big item.
I see it. $1.2 million.
Yeah, and so I'm assuming we will not have it, we will not have that kind of extra money. So mine is more just to say that once again, because I've been talking about this for years, once again, it has not really gotten funded as, you know.
You've gotten 350,000 year before last, or
Yeah, I was gonna
500.
say,
No
we had
offense.
some funding for,
Yeah.
No offense, $350,000 on the 43 miles that we, I think 43
No,
miles that we,
yeah.
that we have on shell roads, and we haven't taken care of them for 20 years, it is literally a drop in the bucket.
I agree, but you know what's coming up in the future, so I
What?
wouldn't support it either, sorry.
I did said I wasn't gonna pull that one, because I know that's way too much ice for a decision unit. I'm more just, I'm
Ventilating.
I'm venting, yeah. And also number, utilities, page 245. Once again, I'm not pulling this because this isn't gonna get funded. Number 20,
245.
what is it?
alum, sludge, dewatering, and hauling. That's gonna be a serious problem at the lake if we don't address that eventually.
Don't they have one?
Well, if it's a enterprise fund, couldn't they be required, if that is something they're required to do to provide
I would have
the
thought it would have come
treatment,
out of their
then I
budget,
don't know why,
but it's in
unless
our
it's just
decision
something.
units.
Jan knows.
Yes, Jan, go ahead.
Oh,
That one, I believe, and I will double check, was forward funded.
it says,
Okay, and I'm fine with that. I'm just telling you, if we don't fund that, that is something that will
Regret.
will not go away.
We actually did it in this fiscal year.
Okay.
Oh, we did?
I'm
So
fine with
that's
that.
why that one, it came before you as a BA.
And I
So
have-
that one, that's why
Oh,
that
we've
one
already
is
done it,
unfunded.
it's already been funded, good job.
good catch, Priscilla.
And I have
Betsy, I'd
other
like to
stuff, but
speak when it's time.
since we really don't have that much money, I'll kind of let y'all have a couple. I mean, no offense, we always need new bucket trucks, traffic calming increases, you know, so.
Okay, Vanessa, I think I heard you?
Yeah, I wanted to go back to one of the items that Priscilla had talked about the shell roads. I mean, I understand 1.2 might be a little bit of a stretch for right now, but didn't we last year, what did we do on that ferry last year? It seems like we did put some money aside, did we not?
I thought we did as well.
250,000,
Okay.
And the year before,
and the year before the same.
yeah.
But that's,
I'm sorry, how much was it?
250,000 in this
Okay.
year.
The last
And the year before.
And the year before.
The last I heard, they were trying to figure out what to do with that money. Whatever happened with it, I never heard. Does anybody know?
So it's like
we
500,000.
were talking about possibly starting to
Yes.
mill some of the roads and not shell them, and
Yes, yes, Commissioner Ball,
Right.
you're right. We, Public Works put together a plan that showed a potential over the course of a number of years addressing the shell roads and milling and various options. We can pull that back out and take a look at it. It was fairly high-ticket item, but it's certainly something that we can look at addressing in a possibly a different manner, maybe not as extensive, but they did put that together. I think, as I recall, we shared that with the board, but we didn't cover it in detail. We didn't talk about it. So there were 3 options on that. We can bring that back
Okay.
if you guys, if that's part of what the board would like, we can come back and talk about that.
Or just send me an update. I'd be fine with that if that's more convenient. All right, thank you.
All right, others, a question came up during public comment about the stormwater fee and projects. Do we have a list of projects that we're gonna be trying to fund for stormwater projects? Is that part of this CIP discussion?
Utilities.
Jan?
Yes, if I may, and we'll resend it to you and make sure it's on our website. When we presented the CIP, there are a couple of projects that Chad wanted to bring forward. We had pushed quite a few out, and he's like, no, these have to go forward. I do not remember them off the top of my head, but we will send it to you by the end of the day and make sure it's posted.
Okay. All right, because I think that's gonna be important to know, because I know those are big ticket items. And, when we talk about excess revenue, if that's the proper way to talk about it, available funds, and we have these needs, then we need to make sure, we understand what we can meet and what we can't meet. We're going to be changing around some of our reserves. And I include budget stabilization in that term loosely. Okay. Misty?
Yes, and I have a few comments that are in different areas. Before we end our day today, I think it's important that we have Jan just give a comment on the public comment that we heard about the unrestricted cash and what Florida statutes require. And then I'd like to go to this sheet that you handed out. And so I understand we're going to talk about this again, but you did ask us if we had any comments.
Yes, please.
And so a lot of the items that I brought up say, response needed, response required. And so I need those responses to further understand them. For example, the land acquisition needed on 63rd Avenue. I need to understand where we are with that. So when will we get that information?
I will pledge that we give it next week.
Okay.
I was thinking within the next 2 weeks, but I want to under-promise and over-deliver. So I will
so
make
smart.
sure that it comes next week. And even with the chart on that I'm going to do for you tonight, I ask that you wait until I do it for Monday so that we make sure I've got everything the way it should be, and we'll post it for you.
Okay, great. And then going to the decision unit book, I had 2 things that I thought were really important to bring up, and number one was stormwater, and which Betsy kind of touched on. And so those are big ticket items. For example, pond spraying and stormwater basin maintenance. Those are unfunded right now. Those are very important items in my district. And so obviously I want more funding there.
What page are you looking at?
I'm on
That'll help.
page 189.
In the book?
Yes, in the book, items number 24 and 23. And go ahead and add 22, because street sweeping is another way that helps our stormwater management system.
We have
So
street sweeping.
I'm sorry, what did you say?
We have street sweeping somewhere, don't we? I've seen that for ages.
Well,
It's an additional funded request.
Oh, another.
Yeah, it's
'cause we
on
do
top
have
of what we're currently doing.
It would be nice to know what we're currently doing, because I know we've been funding it for years.
It's in continuation 7 and in continuation 9, 60,000 and 175,000.
So we do, okay.
So I'd love to hear a bigger discussion about stormwater and how we're going to accomplish the things we need to accomplish, because I see those guys working out in my district all the time. They're barely keeping up. And there's always needs greater than we have manpower. So I don't know when the appropriate time is, but I'd like to see more funding placed there.
Okay, we'll take a look at that. We'll
Okay.
take a look at what's
Thank you.
associated with those.
Because we have some.
Oh, I'm sorry, I didn't tell you the second thing, code enforcement. There is an unfunded position in well, there's actually a couple, but we really need those officers on the street. I understand we couldn't fund the field supervisor, but I sure would like to see us get another code enforcement officer on the street. That's another area where they are just pushed to the max. They're.
What
And,
page, Misty? I'm sorry.
I'm sorry, page number 11, and the item number is number 4, code enforcement officer with vehicle. We're also not funding a field supervisor, but I think if we could get that officer out on the street, that would be really helpful.
Right, so we're funding one new, we had recommended one new code enforcement officer, and will be, then Commissioner Servia is asking to consider additional.
Yes,
Okay,
thank you.
got it.
All right. Other things, so yeah, it's a question again of where the funding's gonna come. It's not, obviously, if we're funding staff, it's not one-time funding. It's,
Yeah, the
repeated.
commission, the administrators recommended a budget. Everything else that we're doing is over and above what she's recommended. So we have to help decide what we're gonna take out.
Right.
It's not that we're gonna add, 'cause we're not gonna add taxes, and we got issues coming up in 21 and 22, and then we'll have a layoff, which we don't want that.
Yep, totally.
and the question is, I mean, obviously, people say, well, you've got all this funding, you've got all this money and
Recurrent.
budget stabilization. I mean, that is something that would be drawn down, but is not being replenished, right?
Correct. That's one of the things. Now, remember, in the unincorporated area, they got a little bit of an increase with the property values. So I can go back and look and see, because if the taxes go up, that's a recurring,
Right.
not a one-time.
Right.
And remember, though, I'm just warning everybody, as they go down, that, that it's another situation. But I do believe that one, I'll get with the county administrator and we'll look at that one. But I believe that one has the recurring funds and stabilization that you could do this.
And if I might add, I know we talked about the Southwest TIF money may possibly be available to use for code enforcement. I never heard back if we had fully analyzed that.
I can, I would have known that a couple years ago for sure, but I've lost completely all that wording. But law enforcement, yes, I'm not sure about code enforcement, but we'll take a look. It's not going to be hard to research that.
Okay. All right, other things that y'all have looked into?
That one thing, Sherry, what is that? And I don't know what page. Patient Healthcare Advocacy Pilot, 1.469 mil.
That might be in neighborhood services.
Neighborhood
Let's go and
sorry.
See,
Where?
it might be in neighborhood services.
274?
274?
274.
Oh, okay.
Can somebody tell us what that is?
Oh, it's in the nonprofit stuff?
Yeah,
It's in a different group.
Oh.
it is.
74.
We're looking to make sure.
Well, I can tell you, I don't see it there, but let me go to,
You guys know what I'm talking about?
I know what
'Cause
you're
I read
talking-
it somewhere.
I know what you're talking about.
It's a pilot program, so it's not on 274.
Yeah.
I'm going to ask my staff if they know if it within their departments.
Well, I think it's associated with the healthcare funding, and it has to do with the monies that we have set aside, and it's in the program right now. I believe they've just, if you guys, it's the portion of the program that actually helps to,
What is it?
Page 280, but I'm not
Page
seeing an unfunded.
Page
on there.
208?
Page 280.
Oh, 280, sorry. Oh, yeah, I got it. Well, I just looked at that.
yeah, is that the one, continuation 14? which is part of the
Yeah.
healthcare funding.
Yeah,
And it was-
maybe it's because I never heard it before. I know it's funded.
Yes, it's been in the budget for the last couple
What
years.
is it, though? I forgot.
It is the program that comes out of Neighborhood Services under the Indigent Care Program that the Healthcare Advisory Board recommended a couple years ago.
Right.
To contract with a nonprofit agency to help to get individuals who are not insured connected with a primary care physician and to be able to access health care. And so I don't know the new person's name. I think they've just hired. If you remember, Stephanie Chinque was the prior individual running it underneath our healthcare service with Joshua Barnett. Now there's been a new person hired just recently, and I don't remember her name. But this is the pilot program that is the money put out into the community. It's not in place yet.
Oh, okay.
It's not an active program yet, but it's funded. It was funded with the monies that was to go to Blake Hospital if they were going to participate in the HIE program.
And they still haven't. They signed up for it with HIE, but they never participated. 'Cause
Correct.
I have access to all that in my other job, and Blake's still not on it.
Yes.
Okay.
Yes.
Okay, Priscilla?
Yeah, like I said, I had a nice long list. So if you want something that's not where you actually have to have an employee, page 181,
Hold on.
number 32, additional traffic calming devices. I personally have used a lot of them lately. So just saying, that would be very nice.
Okay.
And I had a question on number 24. It says replacement of spray techs. Are you saying we don't have any spray techs? In which case, that would be serious. Because if we don't maintain ponds, herbicides and things along the roads, that's pretty serious.
It says replacement.
It says replacement of spray techs. So I don't know if that means we don't have any. I don't even know how many we would have. If we
So
had
on
any.
page 197, it does define what that item is. This decision unit provides for the reinstatement of 6 spray technicians cut from the budget in past years and 1 supervisor position.
Okay, well, I'm not saying you have to have all 6 of them at the same time, but I don't know if that means we haven't been spraying.
No, I think it just means it was reduced.
Yeah, we reduced.
Okay, well, that's, like I said, if they think that's pretty serious, and that also aids a whole lot in stormwater drainage. If you're not maintaining your ponds, you're not maintaining the herbicides with the weeds growth and all of that, it slows down, it affects your drainage.
Ron Schulhofer got the biggest cut during when we had the over 300 layoffs, and that was probably part of it.
Yeah, and I think what's going on now is we're responding to requests for spraying in particular areas, but if this program or these positions were reinstated, we'd actually have an ongoing program to go out and do pre-work. Thank you. Okay, so we've highlighted that to review. Okay?
I'm good.
More on your wish list,
Oh, I
ma'am?
have all kinds of things, but like I said, since we made money, it's costing us money, But $30,000 for calming stuff, that, we might be able to get that one in,
Yeah.
maybe.
All right, Vanessa or Steve, is there something that you wanted to flag or discuss on the decision units?
I'm good, thank you.
Okay.
I'm fine too.
Okay.
Have at it.
All right, yeah, I guess I was kind of not looking for a whole lot of things, but I do think it's worth discussing some of the stormwater and where we stand on that, those projects, because we know they can be long-term. We know that, this idea about FEMA, I was at what was that, when we were in Washington DC, and I heard Marco Rubio say that FEMA was not, we're not going to be able to go to FEMA after a lot of these emergencies. They're going to be looking at the local governments first, and I'm pretty sure everyone that was in Washington heard that statement, not just me. So I am concerned about that. We need to be aware that FEMA is, we all know that FEMA's been underfunded and has had a lot of demands on it, and it's not surprising to hear that they were not going to, participate in the COVID. There's different funding. But I think we just need to be aware of that as we move forward. We need to be ready to be able to handle emergencies ourselves. So don't know if that's going to change, but Anyone else hear that? I'm not making this up.
Oh, yeah, I heard.
Okay,
Yeah,
thank you.
told us.
All righty.
So we will review those items that you've mentioned, and Jan and her staff will get some more details, and we'll report back to you.
I think that'd be great, and especially as we talk about projects that are underway. I know that we got a lot of funding we did get funding under a cooperative funding program for Rabonia. You know, and I don't know, again, whether or not that's a phased project or whether or not all the funding is put in place, but I guess that comes up as we talk about the CIP,
Sure,
and we
we'll
can
get a
talk about that.
We'll get a status report on that project.
Yeah, I think that'll be good as we go into the CIP to talk about some of the projects that are ongoing as well.
Madam Chair,
Yes, Carol?
so this list that we've presented that you're going to talk to us later about, you've presented us, and we do this every time, you've presented us your budget. So if we do decide to do some of these things, we have to find out, like you said, where to cut back. And on this list that you gave us, it has no numbers next to it. I know because you've got to do more work on it. But again, we've got to be prudent for 21, 22, or we're going to be back where we did before. And, you know, we've talked about getting jobs out for our, like Priscilla before the break had said that, you know, this extra, these monies that we have, we're able to upfront them and get some of these, like we used to do jobs now, but it's not that. But get some jobs on the streets to help our citizens that have lost their jobs. And I know in the CARES Act stuff, we're having retraining and all that too. It's so confusing. So many people ask me, I told them, just go on our site, and if you can't find it, let us know. We'll try to help you. It's major overwhelming, but there is opportunity. So it's not, I mean, so everything we pulled on this list looks like a lot of money, and we're going to have to figure out where to pull from the budget.
And you're talking about the CIP list right now there? We'll be gaining more information, and I think as Jan and her staff have mentioned before, we take your comments and then we look through the different, where those funds might be, because they're not all coming from the same fund sometimes. So we would then let you know when we come back, this is either doable under this fund now, or it would stretch this fund beyond the 20% reserves, or it's not eligible, let's put it that way. And then, as you're saying on the CIP projects, it may come back to whether you want one of those projects to be funded sooner rather than later, or make an adjustment to some other program. So we'll work through all those and come back to you, but and we'll be clear about each one. You did not pull a whole lot of them. There's a lot of notes on your CIP project, and we definitely will be able to provide some updates on that.
And the impact to the infrastructure sales tax as well as impact fees will have an impact on our capital improvement. So that will be part of the discussion as well. So, I mean, it'd be nice to forward fund things and move things up, but the reality is those kind of, I mean, based on what's going on at the state level, we can presume that we're going to have that kind of an impact, right?
And yes, and one of the things with the infrastructure sales tax, we were very conservative on it because you have to have all your money up front. But the good thing, the positive thing, is that on what we're seeing this year in FY20 so far, it's much less damaging than what I thought it was going to be. Now, the state has not produced its estimates for that. That's the only estimate left that they have not released. So they should be releasing it soon. We'll pass on that information. But I think if they release where I think they're going to release, we'll be able to come back to you and say, here's additional money that we feel we can go ahead and move forward with a lot of these projects.
So let me just ask, so and maybe because it's afternoon and I'm not getting it, but the infrastructure sales tax, you're saying the state is, even though it's our fund, so why is the state doing it?
Okay, so the way it happens, the state is the collector of all the funds. Okay. So they go through with a basic calculation and they estimate every year so that they tell everyone that has voted for these type of taxes what they can anticipate. And they provide that estimate every year. Usually it is provided by the 1st of June. So we're now almost to August, and they haven't released it yet, and actually, they were supposed to release it last week. They released everything else, 3 other ones this week. That's the only one left they have not produced.
Okay, all right.
And keep in mind, when we talked earlier about a quarterly review of the CIP, that would allow you to do budget amendments as Jan's office brings back in more detail, either less or more, instead of us doing it once a year or once every 6 months. We're talking to you about, okay, we're going to be able to bring you updates quarterly, so if there's something urgent that needs to be moved on, it may require us pushing something else out that is farther out, or it might require you to make that decision. We'll be bringing that back to you.
Okay, great. All right. Anything more on pulled items, we're calling it, right?
Yes.
That's what it's called on the agenda.
Yes, called pulled items.
It's pulled items.
Now it's pulled.
Yeah.
Okay.
Okay.
All righty.
Thank you.
Okay, with that, we'll move into the last section. And the last section is talking about where we go from here in the rest of this budget process and what it entails. So by August 4th, which is 35 days after they provided the certification of value, we have to turn in to the state of Florida what your millage rates, your anticipated millage rates will be. Again, that is the height. You cannot go higher. You can go lower. Then we will have September 14th will be your first public hearing. That's going to be announced in your trim notice. And then on September 22nd, we have the second public hearing. So for today, in front of you, I provided a list of your millages. There is no change in the millage, but I wanted to make sure we were very clear with the millages that we have, and I will read them very quickly. The general fund is 5.2942, transportation 0.2536, library 0.2475, children's services 0.333, parks 0.3040 for a countywide operating millage of 6.4326. Your unincorporated MSTU is at 0.6109, and you do oversee Palmer MSTU, which remains the same at 0.2546. The rollback rate would have been 6.1757, and what we do today is that if I have a motion, I can read for you, and then that way, if you'd like to so move and move forward, I'm a little particular about the trim hearings. We want to make sure we get everything the way it's supposed to be, because I don't want it to mess up. The motion I would have you do would be to move to approve the millage rates as presented and authorize the county administrator or her designee to move forward filing all documentation with the property appraiser.
So moved.
Second.
All right, we have a motion and a second. I'll go ahead and open this back up for public comment. I don't know if we have anyone in the audience who want to make public comment.
Or phone.
Anyone on the phone?
No, ma'am.
All right. We'll close public comment. How do you vote, Steve?
Seth, can you turn him up? I lost him.
I just want to make sure they were.
Yes.
Okay. Vanessa, how do you vote?
Yeah.
Yeah.
Yes. Reggie?
Yes.
Carol?
Yes.
Misty?
Yes.
Priscilla?
Yes.
Chair votes aye, motion passes unanimously.
Thank you.
Okay.
One thing I did want to address, just some closing comments. Commissioner Servio brought up the presentation at public comments. My office is going to take that on as a project. It is very critical that when you're evaluating and analyzing financial data, you're understanding the complete accounting procedures that go through it. Your clerk's office, I just want to remind you, has a team of CPAs that work on this, as do all those other clerk's offices. So I just would like my office to take this and come back, and then we can report to you on what we have. I think that would be a good exercise.
Do you mean Jim's comments?
I'm sorry?
Mr.
I mean, Mike
Meehan.
Meehan's?
Yes.
Okay.
Yes, we'll go through and do that.
So you're talking about this?
Yes.
This paper?
Yes.
The first thing I saw is population is updated, so that was the only thing I saw that I knew, that I could figure out, because it says 387, 414, we're at 411,
Yeah.
something.
So we will go through, and I can give you a quick example. A lot of the other counties take their 20%, and they put it in an assigned fund. It's called assigned reserves. In our county, the clerk puts it in unreserved. So you're comparing two different things when you're comparing. But we will personally call each county on there to make sure we have complete clarity so that we understand.
Yeah, and I'll just say, because, I mean, my biggest concern, and I've heard this before, and I think you've addressed it before, but we're hearing it again, that we have a, more than we are allowed to have. I mean, obviously, those are concerning words.
Yes.
We want to be totally compliant. So
Yes.
that was something that I heard again that causes me concern.
And if I may, the state of Florida statutes that are very clear in what you can have in each category. I think what is being misunderstood is the way that they're identified. Remember, your CPA came before you and said part of their audit procedures every year is to look at this and make sure it is appropriate. And he came before you and said that it was in line with what they have. So I think it's I plan to bring back to you extreme clarity and extreme clarity on what the other counties are doing as well.
Okay, I think that's good. All right, questions, comments, board members on this? As always, we thank your staff for the great work that they do, and, you know, this is very important, as I like to say. You know, we have one rule, our one mandatory thing we have to do as commissioners, and that's adopt a budget. So, and being as clear as we possibly can to our constituents, I think is a good thing as well. So I thank everybody for participating, and I think we got a lot of good discussion out. Anything else, guys? All right, without any further business today, we are adjourned.
Thank you.